What's going on, folks? Welcome. You're live, Mr. Black. There we go. Good to go here. Good to go there. Good to go everywhere. All right. We are live on all social media platforms. Welcome, everyone. You're live, Mr. Black. There we go. If it's your first time joining live with us, if you have any questions about trading, if you have any tickers, any currency pairs, anything you want to check out, just let me know in the chat, guys, and we'll check it out together. What's up, Roger? How you doing, brother? Well, let me turn that chat. NQ. Let's start with some NQ, my man. Let's do it. Let's get our ticker list going. Let's get started. What's up, brother? How you doing, man? Do you think breakout and retest is a good strategy? I think retest is a better strategy than breakout. It tends to form better levels. Because when you break out, you're going to be encountering oppositional structure as you break out. Black logo. What's up, crypto? How you doing, brother? Ever heard of a 50-minute order? I'm assuming that's just an order block. Love with the ICT crowd last couple days. I mean, I would assume it's just that, Charles. I would assume it's just that guy loves taking things that exist and then rebranding them. So if I were to venture a guess, it's probably just an order block, and he's just decided to start calling them orbs so that you can Google and you'll search for orbs and you'll only find his channel. That would be my guess. So I'm assuming that's what he means, but I'm not sure. Gold futures? Sure, I'll put it on the list, man. All righty. GC. That's just my guess, Bazzy. I'm just guessing that's what it is. I don't guys understand. I don't watch that guy, right? I'm not really interested in somebody who pretends to trade. But that would be my assumption. My assumption would be that he's taking an order block and just renaming it. All right, so here we are. We're going to be looking at NQ here. NQ, for those of you who don't trade futures, is more of a day trading asset. Futures is more of a day trading asset. Very, very fast moving market. And for that reason, we're going to be drilling down to lower time frames when we're looking at structure here. Now, just because I'm drilling down to lower time frames doesn't mean you should be ignoring the higher time frame levels, right? You should still mark off those higher time frame levels because higher time frames do tend to be more powerful than lower time frames. So you want to be cognizant of where those levels are. So even if you are like scalping, trading on 5-minute, 15-minute candles, you still want to mark off those monthly, weekly, daily levels. And realistically, if you're trading futures, I would strongly encourage you to make sure you're taking trades that have higher time frame correlation as well, like hourly correlation as well. Right? It's going to give you better opportunities in the market, in my opinion. All right. So let's clear the charts. This zone hit once, popped out. Beautiful trade if you took that first trade. This one never hit. This one hit once, popped out, came back in again, popped out, came back in the third time, popped out. So these zones are pretty beat up. We're going to clear the charts, start from scratch, and do it together, guys. All right. So first things first, what am I looking for? Well, the first thing I'm looking for is I'm looking for areas of institutional order flow. I'm trying to identify where the major banks and financial institutions are buying and selling on the charts. The reason you see professional traders always start with IOF is because most major price action is driven by banks either getting in or getting out of the market. So immediately over here, you can see I have this beautiful sell-off right here. You can see I have a retest of it right here, right? Can everyone see that? You can see I have a second retest right here. And you can see I have so far a third retest right here. So this level has been hit once, twice, 3 times. So from that perspective, guys, is this a level I want to trade? Do I want to take a short off of this supply zone that's been hit 3 times already on an hourly time frame? How do I feel about that level, guys, at this point? Am I excited about it or not so excited about it? Yeah, that's pretty. What's up, James? How you doing, man? Not really, right? I look at these low time frames as like one-hit wonders, guys. I mean, the more times we're hitting these levels, you got to think it's less capital to drive price action on these time frames. And so when you've hit it that many times, I'm not really interested in taking any trades off of these levels at this point. Even that was the first retracement to a little bit of zone creep right there. So these are just a little too beat up for me. Not willing to take any of these shorts. If you were trying to trade directly, it would stand to reason that you might be trying to go short where it is right now. But I myself would not be willing to do it. You have a short at 19,313. Yeah, I mean, it's just a beat up level, brother. I mean, I understand why you're doing it. It's just you've hit this level 3 times already, right? So it's like playing with a little bit of fire at this point. You know what I mean? It could still reverse. It's a little riskier venture. Like I look at these as one hits, guys. Like the only time I would have been interested in taking a trade off this level is there. That's where I would have been interested in taking a trade off the level. And then when it formed a little bit of zone creep, then it would go here or here would have been the only entries I would have looked at on these levels. Now I wouldn't be looking at another entry on it. What's up, Willinson? How you doing, brother? Yeah, workshops tomorrow. For anybody who's new to us, if you're interested in learning more about trading, teaching a free workshop tomorrow night. So if you want to learn more about how professionals trade and analyze the market, you can register for free on our website. On the buy side, you have this, but can you guys see how this is a retest of this continuation over here to the left? Can you see that, guys? Impulse, balance, impulse. That's an area of institutional buying, driving price action up. We came back in, hit the unfilled buy orders left behind, and then rallied away. Does that make sense? Give me yes if that makes sense to you. I don't know if it's worth doing the streams on Instagram. Like nobody logs into Instagram. Yeah, exactly, Winston. What's up, Dark? I consider them one-hit wonders. So I mean, the most recent demand and the most recent supply have both already been hit. And for me, from an analysis perspective, from being efficient with my time and things of nature, if I was trying to trade NQ, I'd be done. That's it. I'm done. I don't need to do more than this. What I would do is I would set an alert for myself above supply here at the 19,386. I'd set an alert below 18,244. And until I break out of this area, I'm going to wait for new setups. Because the time we would have liked to have taken a trade on either of these levels is the first hit. So first hit right here would have been right here to this level, right? Some banks sold heavily here, driving price action down, leaving behind unfilled orders. Price came back in, hit that massive pile of unfilled sellers, and immediately rejected back out, created a little bit of zone creep on the retest. And then we came back in, retested that zone creep right here, first hit right there, and then rejected back out. That was the time to have taken either of those trades, right? On this one over here, impulsed out, came back in, hit the unfilled orders right here. And that was the time if you were going to try and take a trade off of this long position, that was the time to take it. Would I have taken a long off this position, guys? Just so we're clear. I know it worked out, but this is not about whether the trade worked out or not. It's about whether I would have taken the trade. Would I have been interested in this long? Who can tell me just by looking at the chart? Structure-wise. What's the big parameter? For those of you who are Phantom members and have already gone through Essentials Part 2, what's the big thing I'm missing here? It's not the confirmation. That's not the concern yet. Although confirmation is something to consider. No, the issue is the strength. It's very weak strength. I wouldn't have taken it, so it doesn't matter to me. At least not in this time frame. Maybe on a 15 or something. But that's it. That's all I got for NQ. Sit on your hands. Wait for new setups, right? Wait for price to either break below or above supply or demand. 32.71 to put it just up before supply. Gotcha. Well, we're going to go look at gold right now, Mason. We're going to go check it out right now. My background is I worked as a professional trader, man. Came down from 329 and got scared. I got you, man. Yeah, if you guys have any other tickers, just let me know in the chat, guys, what you want to check out. All right, GC. Let's go check out gold futures. So similar thing, we're going to start. We're going to clear the charts. I mean, obviously these levels have already been hit. The supply gave a little bounce there. I mean, Jesus, this thing's like all beat up. All right. This one hit, bounce back down to demand, hit demand, bounce back up to supply, and then we broke through it. Now this one, we just gapped right through it. Right? We just gapped right through that. And this is why even if you are trading a level, like we had talked about this level, right? What were some of the concerns we had? We had a lot of time spent. We had impulsed out and come back in and tested it. So we wouldn't have taken the trade because that was the time to take the first retracement, right? That was your entry if you're going to trade this level. That was your time to have gotten in. But this is a great example of why I treat these low time frames as one-hit wonders. If you're going to trade on low time frames, you just have to take into consideration it's less capital to drive price action on an hourly level, which means it's easier to break those levels, right? So you got to be cognizant of that. You got to be cognizant of that. Well, it rolls over. Well, they close out their books twice a day, and they have rollover between the monthlies as well. So that's typically when you'll have gaps, my man. Most of the time, you don't have any gaps in futures. Just during those periods, you do. Cool. All right. Again, a great example of why we're careful with levels like that, right? Already tested, first hit, beautiful trade if you took the first hit, nice bounce off those unfilled orders. Second hit, just right through as if there was nothing there, right? Great example of why you want to take these trades as one-hit wonders. All right, let's start here on the hourlies. And what we're going to do is we're going to mark off new levels here on GC, see if there's anything good. Interesting little impulse, balance, impulse, massive gap right there, right? As Abdullah was pointing out, massive gap right there off that sell-off. Some big bank institutions sold heavily. SPY and Apple, Chico? Sure. I'll put on the list for you, brother. SPY, Apple. Some big bank institutions sold heavily here, driving price action down. It's a pretty big gap, and we're having an imbalance with that gap that we got to take into consideration. On the buy side here, not the best in terms of structure. We have a little bit of an impulse bounce, impulse continuation right here. Again, massive, massive gap there with that price action. So demand, supply, institutional buying, institutional selling. We got our hourly levels. We're going to drill down to the 15s. And what I'm looking for on the 15s, I'm looking for trend and I'm looking for correlating structure. Yeah, but it changes your structure, Jay. It's going to screw up your structure. Here we are on the 15s. Do I have any clear institutional order flow here on the 15s? I do. But first, let's just evaluate trend. What's our trend here on the 15s, guys? Is this an uptrend, a downtrend, or a sideways moving trend on GC? Up, down, or sideways? Thank you for the likes. Thank you for the follows, guys. It does help boost us with the algos here. So if you like what we do, please tap the screen and tap away. Why are you saying up? No, we're in controls way. Unless there's is that a gap right there? Am I missing a gap right here? Oh, there's a little gap correction, but we still haven't broken it, man. We haven't candle closed past it. We've wicked past it, but we haven't candle closed past the control. So no, it's still a downtrend. We're still in the corrective phase from the impulse correction. So still a downtrend, which means ideally we'd like to go short, right? It could be. That's very true, X. It could reverse, right? But as it stands at this exact time, it is still a downtrend. Does that make sense to everybody why it's still a downtrend? We have not candle closed past the control point. So downtrends are determined by establishing lower highs and lower lows, right? We clearly had lower lows, lower highs, lower lows, lower highs, lower lows, and then a little correction right there, lower high, lower low. And so far, it's just a lower high. Now, if this candle closes above this yellow line right here, then you will have officially ended the downtrend. So if it breaks above, like not just wicks above, it has to candle close above that yellow line, then there's no more downtrend. And then it will be instantly reversed into an uptrend because we'll have 1, 2, 3 segments. So it might do that. And realistically, we're trading on 15-minute delayed here on whatever this is, TradingView. So it could already have closed there, right? Maybe it's already closed above. Would be very reasonable if it reverses into an uptrend, considering it's already tested past it twice. All right. Anyway, do we have any clear institutional order flow here on the 15s? Well, I have this massive impulse down, balance, impulse down. So I have a 15-minute level here, but I don't like trading standalone 15s because they tend to be weaker levels. So even though there is a level there, I'm not really going to be trading that level. I just want to be cognizant of it because of where it is, right, and where we're located right now. Up here, I have beautiful correlating structure right here, impulse. I'll zoom in so you guys can see it better. What's up, Adrian? How you doing, brother? I have this beautiful impulse, balance, balance, impulse, nice continuation pattern. Some big bank institutions sold here, driving price action down. And for anybody who knew, this is the type of stuff we're looking for when we're looking for opportunities for trades. We love having multiple time frame correlation, right? It already hit and turned back down. Yeah, I believe you, Jay. That's what I'm saying. Like, but either way, that's why we want to be cognizant of it. These are order blocks, but more specifically, X, these are institutional order blocks. So I'm marking off levels where banks and institutions buy and sell. I'm mostly concerned with major financial institutions are buying and selling, not just generic order blocks, but specifically institutional order flow. The reason you'll see professional traders always start marking off institutional order flow before anything else is because most major price action is driven by banks and institutions. And this just comes down to the amount of capital that banks and institutions trade with. Banks are not trading, they're not buying like 100 contracts or 1,000 contracts like you or I might. they're dealing in millions of contracts, right? Massive, massive positions. But there's still only so much given liquidity in the market at any given time. So when a bank places a large buy order or a large sell order, what typically happens to the banks is they're only able to fill a portion of their order because there's only so much liquidity available in the market. So they fill a portion of their order, but then because they still have this huge pile of unfilled orders, they create an imbalance in order flow, and that's what causes price action. Because that's all price action is at the end of the day, right, guys? Price action is simply imbalance. If there are more buyers and sellers, price goes up. If there are more sellers and buyers, price goes down. If you have equal numbers of buyers and sellers, you get consolidation. So when you're looking at charts, if you start looking at it from that perspective, right, sellers were in control, we had equilibrium here for a brief period of time. Buyers were buying, sellers were selling. Price was not really moving. Why did it stop here, by the way, guys? Why is that where it paused? Who can tell me by looking at the chart? What's the reason that that's the hesitation? Why is that the hesitation point? Is that a random place, or is that there's structure behind that? Yeah, if you look over to the left, you can see literally right here, impulse, balance, impulse, pivot, reversal. It came back in, hit these unfilled buy orders that were left behind, right? Oops. Some bank bought heavily here. I'm market green so we can see it. Some bank bought heavily here, driving price action up, leaving behind unfilled orders, right? It looks like we came pretty much hitting level and bounce once, gave a little bounce twice, and then this time we hesitated here, but finally, after the third hit, there were enough sellers that they finally started pushing price through. They still haven't, they broke it later, right? They didn't break it right immediately, right? It even gave it a last little whimper of a bounce, but eventually it broke. Does that make sense, everybody? It's just a retest. What's up, Super Dave? How you doing, brother? So if you just start understanding these aspects of trading, guys, it really makes your trading life a lot easier if you understand why price moves the way it moves, right? When we draw this in, do these like whisper, wicks in, and then pops up, wick, and then pop, and then finally hesitate, push further, wicks through, but doesn't break, pushes back up. There were still some unfilled buy orders sitting in this big, big demand zone. And finally, after we retested the level of institutional selling, we gained enough strength and movement where we actually finally managed to break through the demand zone. And finally, the demand zone was gone. After that many hits, there just weren't enough unfilled buyers left. And finally, the sellers won. Right. So if you were going to take a trade there, that's really where we would have been most interested in a trade, right? When it came back in and retested the level for the first time. At that point in time, it was just a standalone 15. So it's not a level I would have traded yet. I want to have clean exits out of hourly 15 correlation and then retest the level to give me an opportunity to get into a trade. So either way, it's hit already. It's done. That one's done. On the buy side, let's go see over here if there's anything good with this little mini level over here. Very tight structure on the demand zone. And we're in the same boat. You can see it right here. Impulse, balance, impulse, a nice continuation pattern. Some big bank institution bought heavily here, driving price action up on GC. Did they fill all their buy orders when they bought there, guys? What's up, brother? This is just Trading View, Amron. Nice, man. I'm never mostly in anything, Mason. I have precious metals. And then if we have bearish markets, I lean more of my portfolio towards precious metals because they tend to be safe havens during bear markets, right? But I'm never all in on anything in my portfolio, or never like mostly in one thing. I just skew it more heavily towards one sector or another. Does that make sense? But like it's always just a portion of my portfolio. Because like with portfolio management, for anybody who's trying to do portfolio management, like long-term intermediate positioning, really it's a lot about protection. That's the primary thing that you want to be focused on. You want to be protective of your assets, because you don't want to have something like, if you're trading with large amounts of capital, which most people have the majority of their capital in like retirement accounts, stuff like that, you just don't want to take like huge hits. Like anybody who's down 10, 15% for the year, which is probably the majority of people with their 401ks, IRAs, things of that nature, that's not good, right? That means you're not really managing your wealth effectively. You don't want to lose huge amounts of capital to then wait months and months and months to try and make it back, or worse yet, years and years to try and make it back. That's the least effective management of your capital. I understand that that's what investment firms orient you to do, but I always put it this way to people. Is that what they do? Right? They tell you buy and hold, dollar cost average in. Is that what any investment firm does, guys? Is that how they manage their money? Even for long-term positions, do they take hits for years and then wait years to make it back? Or do they manage it a little more proactively than that? Yeah, it's not what they do. It's what they tell you to do. But that's not what they do. And you don't need to believe me. It's public information, right? You can go look at their 10K filings. So it's like, maybe don't listen to what the guys who make commission off of you having assets under management tell you to do, and maybe actually learn to do what the investment firms do, right? That's going to be a much more effective method of managing your wealth management if you want to do long-term positioning. Don't tell what the sales guy tells you to do. Right? Maybe not the sales guy's advice might not be the best. There's a reason the sales guy does not trade for the company he works for, right? Because all these guys, FAs, brokers, right? All these guys, do you understand? Those are just salespeople. That's all they are. It's just a better sounding word for salesperson. And if anybody in the room is an FA or whatever, I'm telling the truth, right? That's just the reality of it. So like, maybe not just the blanket bare bones minimal advice of just buy and hold and ride out massive losses for years and then wait years to get it back. Maybe actually look at what the major investment firms do with their own money, and then you have a better strategy and a better approach towards it, right? You could be a little more proactive with it. Yeah, so I see what you're saying, Mason. Now we're bouncing out of that supply. Does it make sense why we're bouncing where it bounced though, guys? Can you see the structure of the zone? Can everyone see the structure of how we have this huge gap in? So that's an impulse move, balance, and then impulse out. So impulse, balance, impulse, right? Some banks sold here, driving price action down, leaving behind unfilled sellers. Price came back in, hit those unfilled sellers for the first time. And because there was that imbalance, yeah, it's live, Duchess. How would it not be live, man? We're looking at charts together. Oh, I guess you can't see the time or date or whatever. Came back in, hit those unfilled sellers, and bounced right back out, right? And now we're coming down to this little mini demand zone where we might get a bounce as well. Who's to say? It depends how strong this level of imbalance is down here, right? Because it's still imbalance of more buyers, sellers driving price action up. The red and the green boxes are areas of institutional order flow. So where do I sit right now? Same thing as we were saying on NQ, man. Sitting on my hands, waiting for new setups. I would wait for a new setup on this, right? Wait for a new opportunity. Yeah, I can explain it to you, brother. I can explain it to you. ES, Darwin? Sure. Let's put ES on. All right. If you are new, if this is your first time in a live stream with Phantoms, a little bit of background. We all worked as professional traders at investment firms. So the way we're teaching is going to be a little bit different than what you're used to. Or as Heath says, you're just guessing. There you go. To buy some long or not yet. It's not how I trade, F. Let me explain how I trade, because that'll make more sense to you when I explain how I trade. That'll make it a clearer reason why. So whether I'm doing intermediate or long-term positions, it's all based off of structure. So if you ever worked at an investment firm, right? One of the first things you learn if you work in a major investment firm is that most major price action, most major price movement is driven by banks and financial institutions either getting in or getting out of the market. Does that make sense? Why is that the case, guys? Why is most major price action driven by banks and institutions? You guys tell me in the chat. Any of the chats. Doesn't matter which one. You can say it on YouTube, on Instagram, or on TikTok. I'm seeing all three. Heath, you got an opinion? Yeah. Banks trade with large amounts of capital, right? When you start getting to the major investment firms, they are not dealing with hundreds of thousands or millions of dollars. They're dealing with billions of dollars, trillions of dollars in some cases, right? Massive amounts of capital, massive amounts of assets under management. So when they're placing orders, they're not buying like 100 shares, 1,000 shares, 10,000 shares. They are dealing in millions of shares, millions of contracts, millions of lots. But when you place orders of that magnitude, there's still only so much given liquidity in the market at any given time. There are only so many active buyers and sellers available in the market. Exactly right, Roger. So what we look for, the first thing professional traders look for, and this is why does every professional trader in the world, I know tons of professional traders, I don't know of a single one that does not start with institutional order flow. Every single one I know starts with marking off institutional order flow. Because when banks place orders, their orders are so impactful that it causes price to move. Is everybody with me on that? They place such large orders that it impacts balance and imbalance in the market. It actually drives price action. So I want to know where those guys are buying and selling. That's the first thing I want to know is where are they buying and selling, right? What do I care about retail traders reading about, politicians buying 10,000 shares? These are not significant orders. Goldman Sachs buying 10 million shares of XYZ, that's important. That's a big order. I don't care about, some random, CFO of some company who bought 20,000 shares. That means absolutely nothing to me, right? Where are the big boys buying? Where are the big boys selling? They're the ones who actually control most major price action in the market. So we start by marking off these levels of institutional order flow. So looking here on the monthlies for SPY, I have this beautiful impulse up, balance, impulse up. Can everyone see that structure? Give me a yes if you can see that structure. All right, there you go, Los. Has everybody seen that? Impulse up, balance, impulse up. That is a continuation pattern. Some big banker financial institution bought heavily here, driving price action upwards explosively on SPY. Now, why is this likely institutional? What's the reason that this is likely institutional, guys? What's the reason for that? Why couldn't it just be us? Why couldn't it be Sally taking her Christmas bonus and saying, I'm going to invest in the markets this year? Yeah, it's a massive move. This is SPY. SPY is one of the most heavily traded ETFs in the world. I think it is the most heavily traded ETF in the world, if I'm not mistaken. So you're talking about one of the largest markets in the world, the most heavily traded ETF in the world, right? Yeah, that's initial structure, nobody. That's what we start with, right? We look at a lot more beyond that, but that's step one is institutional order flow. Exactly right, Roger. Exactly right, Shafaf. That's what we're looking for, right? So for you to cause price to rally this explosively out of balance, like look at what was happening here in terms of structure of the candles. If you don't understand candle structure, guys, I do recommend learning just basics of candles. Like when you see this moving up, when you see this impulsive rally right here, what is that indicative of to you in terms of order flow? That is telling you that there is an imbalance of more buyers and sellers. The only way price can go up is if there is an imbalance of more buyers and sellers. Then we have this small bodied basing candle, right? Buyers are buying and sellers are selling, but price itself is not really moving. We have equilibrium. So I have imbalance upwards, more buyers and sellers, and then I have balance, equilibrium. Buyers are buying, sellers are selling, price is not really moving. But eventually, in this area, there were so many more buyers and sellers that every seller was exhausted. We had 0 sellers left, and all we had left was a massive pile of unfilled buy orders. And because there was that imbalance of more buyers and sellers, price exploded upwards again. Right? So impulse, balance, impulse. Cool, cool, cool. So if you want to think about this mathematically, think about it from this perspective. You're a big investment firm. You work at, State Street, right? One of the biggest investment firms in the world. You're a trader at State Street. You're looking here at SPY. You trade in equities and indexes for the company. And you're looking at it and you're like, okay, I see an opportunity for us to drive price action here on SPY. We're going to look for an opportunity to go long here. And you're going to position size out. But because you're working at State Street has what, 6 trillion assets under management, something like that. You're like, okay, we're going to go and position size out to buy, I don't know, what would be a good amount for SPY? Like, let's say 20 million shares of SPY here at the limit price of 42. Now that's a big order, right? 20 million shares of SPY at 42 is a big boy order. Can most retail traders afford to buy 20 million shares of SPY at 42? No, there's like a handful of people in the world that are retail traders that could afford to place that trade, right? 99.9% of people, not anywhere close to that level of money. It's all right, Jam. Right? Most people don't have that level of capital. So they place this massive order to buy 20 million shares, but when they place the order, just because, who did I say? State Street. Just because State Street wants to buy 20 million shares of SPY at the limit price of 42, that doesn't mean there's going to be 20 million sellers, right? No problem, nobody. Right? That's very, very unlikely. There's only so much liquidity in the market at any given time. So what typically happens to banks, they place these massive orders, but they only manage to fill a portion of their order, right? So if you want to, let's continue with our example here. They wanted to buy 20 million shares, but when they placed the order into the market, there were only 5 million sellers, 8 million sellers, 6 million sellers. Nobody knows, right? How many, I can't tell you. I can't tell you just by looking at a chart how many shares they were buying or selling. But I can tell you that they did not fill all of their orders. Dude, I haven't touched a Bloomberg in over 20 years, my man. I wouldn't even know where to begin looking at it right now, brother. It's secondary to me, Dutch as. All indicators, guys, are secondary to me. So it's like when I use an indicator, and you'll see this isn't a me thing. This is professional traders. When professional traders use indicators, we use them as confirmations. We never make our trading decisions off indicators on their own, because as a standalone form of analysis, indicators are very inconsistent, right? Doesn't matter which indicator you use, by the way. That's all indicators are inconsistent. Why are indicators consistent, by the way, guys? What's the big problem with indicators? That's nice, user. I always find it, how do I say this without being offensive? Preposterous when people say, I have this thing that guaranteed makes me X% every week. Yeah, indicators are reactionary. Exactly right. The way indicators work is they are not telling you what will happen. They are showing you what is happening. That's how indicators work. Indicators are by nature reactionary. That is how they work. So think about this from the perspective of trading. If you make your trading decisions off of indicators, right? So I'm not saying indicators are bad. I'm saying use them properly. If you're making your trading decisions off of indicators or just traditional TA, and if you don't know what I mean by traditional TA, guys, I mean all the stuff you learn over at YT, you know, the basic stuff: support, resistance, Bollinger Bands, Elliott waves, moving averages, stochastics, RSI, Fibonacci retracements, volume, MACDs, VWAP, candlestick patterns, Ichimoku clouds, momentum. If you follow these fake gurus, the fair value gap guy, the TJR guy, any of these guys, whatever, all these people that make earnings representations, right? Just understand, guys, all of that stuff is very, very basic entry level analysis. It's what I call the kindergarten of trading, right? It's like bare bones, basic stuff. Like it's like you just started reading chapter 1 of what it is to trade, right? So if you're making your trading decisions off of that stuff, what that usually means is you are reactionary to data, which means you are chasing price. And unfortunately, that is not a great way to trade, right? Statistically, how do retail traders fare? Well, most retail traders trade in that manner. Most retail traders are reactionary to data, and 97 to 98% of retail traders lose money over time, depending on which report you look at. So the majority of them are very, very bad at trading, and they all follow that same playbook. So if 97 to 90% of people who trade fail at it, and almost all of them use that same playbook, what should that indicate to you from a logical perspective? Probably I shouldn't do the same thing that those other 97, 90% of people who are failing do, right? So when you're looking at indicators, just understand, because they are reactionary, they are late to the move. They're not showing you what will happen. They are showing you what is already happening, right? It's what is already occurring, which means if you're making trading decisions off it, there you are chasing price again. There you are like every sheep in the herd. Like just basic TA Clippy, right? Go buy the Candlestick Bible, go watch, you know, YouTube videos on support and resistance and stuff like just some basic stuff, right? No, Troy, we're going to go into microcosm. We just start with institutional order flow. So what I'm saying to you guys is, like, when you're using EMAs, like Dutch Az was asking me about if you use EMAs and stuff like that, and I'm saying those are confirmations at best. That's all it is. They are at best confirmations. They're not decision-making factors. I don't mind them as an extra check mark next to my trade, but I understand how they are on their own very inconsistent. So I would never make my trading decisions off an EMA, because EMAs are broken all the time, right? And that's not just EMAs. That's every indicator that exists, guys. There is no indicator that works consistently. All of them. You can choose any single indicator you want, any single one you want. And you can show me on a chart where it works, and I can show you multiple times on the exact same chart where it doesn't work. Does that make sense? Does that make sense, Shafaf? None of them work consistently. And this, to be clear, this is a mistake by retail traders taking a professional tool and misusing it. It's not the tool that's bad. It's retail traders took a professional tool and used it incorrectly. Indicators were never meant to be decision-making factors. They were always meant to be used as confirmations. The concept of using them as decision-making factors is one that retail traders adapted when they started hearing about professional traders using these indicators, and they said, like, oh, so that's how you make your decisions. Like, that's not how we make our decisions. It's a confirmation. It's just giving you an extra check mark. It's improving your odds. That's all it is. It was never meant to be a decision-making factor, right? So like if you took a carpenter's hammer and then you tried to nail, you tried to hit a nail into a piece of wood, but instead of using the head of the hammer, you use the handle of the hammer. And they're like, man, this hammer sucks. Every time I try and use it, it's really hard to nail things into wood. It's like, is that the hammer's fault? Is the hammer a bad tool because you're mishandling it? No, it's you. It's you that doesn't know what they're doing. And realistically, you're trying to look for a shortcut. Because when people try and make decisions off of indicators, what are they really looking for? They're just looking for shortcuts. They're like, do I really need to learn all this stuff? And it's like, only if you want to make a business out of this. If you want to just randomly give your money to people that actually know how to trade, then no, you don't. You don't need to do any of that. If you're doing options, of course, Dutch. Anything can be broken, Shafaf. But what's king? What's number one? What's going to cause most major price action in the markets? Where does most major price action come from? What's up, Groot? There is no strategy that works 100% of the time. Cool, X. Fine. Yeah, and institutional order flow is going to be king, right? Money overrides technicals. Money overrides fundamentals 99% of the time. So it's not that you shouldn't be aware of technicals, not that you shouldn't be aware of fundamentals. It's just their step two, their confirmation. That's all. Cash is king. Exactly right. All right, so let's keep going here. So some big bank institution bought heavily here in our scenario. Who do we say? State Street decided they wanted to buy 20 million shares of SPY. They placed this massive limit order to buy 20 million shares of SPY here into the market at the limit price of 42, because banks have limit orders, right? They have specific entries, specific exits. When they place the order into the market, there are only, let's say, 8 million sellers. If there are only 8 million sellers, how many shares can State Street buy? 8 million. Right? You can't buy more than what's available. There's only so much liquidity in the market at any given time. So if they want to buy 8 million, if there are 8 million sellers and they want to buy 20 million, they can still only buy 8 million shares. So what do? They buy the 8 million. They're like, all right, well, give me the 8 million. Every available seller that is available at 42, State Street's like, gimme. Those are mine. And they grab up all sell side liquidity. Now, by grabbing up numerology, there you go, Randy. By grabbing up all sell side liquidity, what are they really doing in terms of order flow? Well, they're creating this massive and dramatic imbalance, right? What's up, Shark? How you doing, brother? Suddenly, out of the blue, every seller that was available at 42 is gone. But what does State Street still have? Well, State Street wanted to buy 20 million shares, not 8 million shares. So they have 12 million unfilled orders, or UFOs, as they're called in the industry. We can check out DJT, man. They have what's manipulative X. They have 12 million unfilled orders sitting there. So from an economics perspective, if I have 12 million buyers, 0 sellers left, what is that going to cause price to do? More buyers and sellers, price goes up. Always and forever. There are 0 exceptions to that rule. That is what price action is. Price action is just a graphical representation of imbalance. Not only will it go up, it will go up explosively, because that is a huge imbalance in the market. Suddenly, there are way more buyers and sellers, and price explodes away. Is everybody with me on that? Cool. Does the market give them on loan if they're not available? I mean, it would depend on your company, Dutch, right? It's not like across the board the way it works, but you're talking about major firms. Anybody who's causing this level of price action in SPY has the capital for it. What about market orders, X? So price explodes away. What is State Street left with? Well, they're left with 12 million unfilled orders. So this is how professional traders use this information. We identify where banks buy, we identify where banks sell, but we do not chase the initial impulse. Why don't we want to chase price action? Goes back to what we were talking about before. Who chases price? I mean, okay, sure. I guess you could say that. I just think of it as order flow. Most retail traders chase price, and banks make a lot of their capital off of retail traders, retail liquidity. So what happens to a lot of breakout traders is banks will purposefully trap retail traders to take their liquidity. So we don't want to get into the game of chasing price. That is how you will trade yourself right into a lot of traps. This is why when you see a lot of new traders, when they first start learning about trading, right, they start watching. What if you keep drawing? Well, that's not good, Chops. You don't want to draw on the wrong levels. You want to draw on the right levels, right? This is why you'll see a lot of retail traders when they first start learning about trading. They learn these basic concepts, right? And then they start trading and they say like, man, it feels like the market is out to get me. It feels like the market is targeting me, right? Who's had that sensation where it feels like it's targeting you? I mean, it's Shiza 420. You keep coming into the lives though, right? We literally give a money back guarantee based off our results, Chiza. So I can tell you have watched very little and paid attention to very little, but I'm sure you feel very important. So that's good for you, man. You just took down the whole police department. Doing what, Lilith? Who's that? Who's had that sensation? Yeah, right? Is that paranoia on your part? Are you being paranoid? We're just showing levels where institutions buy and sell, Luis. I'm showing how professionals trade. I know. I think it's funny that they come back in all the time, though. Bracket order is a very simple to set up, man. You're just setting an entry, stop loss, and a target. That's all it is. Okay. Thank you. Appreciate it, Baked. Yeah, right. Duchess. It's funny how people will come. It's like, dude, nobody's forcing you to be here, man. I'm just teaching how professionals trade. You definitely don't need to learn. Are you talking to me, Lilith? I'm really concerned. All right, institutional buy and price action. So we're not going to chase the initial impulse because you can get caught in traps that way. What we're going to do is we're going to wait for price to come back to the level. Because when I come back into this level for the first time, what's going to happen? I'm going to hit this huge imbalance in orders. All the unfilled orders that State Street wasn't able to fill initially, right, that caused this huge impulse out, they're still here, right? State Street did not give up on their trade. When State Street only managed to fill a portion of their order and price shot away, were they surprised by that, guys? Oh, they weren't surprised. They knew they weren't going to fill the full order at once. That's the nature of trading as an institution. Lilith, I appreciate your whatever it is you're trying to do, but this is boring for me. So either I can boot you out or you can just be quiet. It's up to you. What do you want to do? You want me to boot you? Is that easier for you? Do I need to force you out of the room for you to be quiet? Just keep watching, Two Laced. I'm just showing you a bank bought here, creating an imbalance driving price action up. A bank sold here, creating an imbalance driving price action down. That's all we're looking at so far. Some big bank bought heavily here. Some banks sold heavily here. So not as much as you would think, Chops. Right? Volume is again secondary because volume can be hidden from you in equities. Right? How can you hide volume easily in equities, guys? What's an easy way of doing that? All right, I'm bored with whoever this is. Hold on a second, guys. I just got to block the moron. And congratulations, you have earned yourself a block. There you go. You can go talk about your whatever secret, whatever BS you're saying. Absolutely honest. That's how professionals trade. Oh, yeah. Sorry, Chiza. You want me to block you too? I mean, I already told you the law yesterday, brother. So, I mean, if you can't even hold attention span for 24 hours and you still don't know the law, there's your answer. Voila! Congratulations. You've earned yourself a block. All right. I love when morons come in and instead of paying attention, they just want to spout as if they have anything important to say. Oh, no kidding, Sir Designs. 100%. It's amazing. People ask me all the time about trading, and then when you actually show them about trading, they're like, well, why not this instead? Well, I watched a YouTube video. And it's like, cool, man. I worked at an investment firm as a professional trader. like no offense, but like we're not on the same boat here. I wasn't watching a YouTube video to learn about it. And I'm not saying that's bad. I think it's great. You guys want to learn, but I'm just saying like we're not in the same world. Like we're not in the same background, you know? The NBA players aren't going to like high school basketball games to get tips. You get what I'm saying? It's not the same world. Yeah, I know, Bulgari. It drives me nuts, man. But I can't do it when I have multiple social medias going. I can't have it going. Right, user. Will you show live trade for tomorrow's seminar? No. Tomorrow's work. For anybody who wants to attend the workshop, by the way, yeah, thank you, man, for reminding me. I'm teaching a free workshop tomorrow night. If you guys want to learn more about trading at a professional level, you can register for free on our website, TradePhantoms.com. Just click this register here button. And in that workshop, we'll do a deeper dive in all this stuff, guys. So we'll teach you more about how the markets really work, like what actually drives price action in the markets, how professionals trade and analyze, how we're identifying institutional order flow. So to be clear, these are not our techniques, guys. I did not invent institutional order flow analysis. None of us Phantoms did. We just worked in professional institutions. So we're teaching more about how we were trained, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with those major financial institutions. How to trade in all directions, whether the market is bullish, bearish, or consolidating. How to use leverage properly so you can reduce your risk, generate higher rates of return. The difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So that's what we'll teach you guys. You'll learn a lot more about trading. You'll see what it's like to actually trade at a professional level. And if you're interested in becoming a member of Phantoms, you'll have a special opportunity to enroll at a discounted rate. Now, I can't do that here, Dutchess. I would have to pull up an option chain, and I can't do that here on social media. I don't have my account set up in a way to hide the account value. You would like to register? You can just register on our website, brother. Exactly, Autis. Yeah, this is just how professionals trade. It's just, if you're, I mean, you guys are on TikTok, so if you just go, it'll be right there, brother. That's where it'll be, TradePhantoms.com. But if for anybody who's not on TikTok, it's just TradePhantoms.com. They could, Chops, but why would it stand to for them to do so, right? You got to think that's where they're placing their trades. And how many retail traders are good at trading, man? Well, 97, 98% of retail traders lose money. So are they really worried about the 2% that's trading with them, or are they worried about the other 98% that is not trading with them? They're more interested in the other 98%. That's where the liquidity is, right? They're not really worried about the less than 2% of retail traders that actually know how to trade. That's not a big concern for them. Learn to trade better than start a funded. There you go, man. No problem, man. That's great, user. That's how you do it, brother. When there is a gap in buying that causes unfilled orders. There are different types of gaps, Yoda. Gaps are imbalances that are occurring outside of market hours, but there can be different reasons for that. I can't get into all the different types of gaps right here on social media. That's going to be too involved the conversation. But there are lots of different reasons for gaps. Yeah, they're more interested in liquidity than 98. All right. So back to the charts, guys. So this is how we're trading. We're identifying where the banks buy. We're identifying where the banks sell, but we're not chasing the initial impulse, because people who chase price will often get caught in traps. What's up, C-Drum? Instead, we're having the patience to wait for price to come back to the level, because when I come back to this level, I'm going to hit this huge pile of unfilled orders, right? The bank did not give up on their trade. So when price comes back in, it hits this massive pile of unfilled buy orders. And because there are more buyers and sellers, anytime you have an imbalance in the market, more buyers and sellers will cause price to go back up. And that is where we look for an entry. Does that make sense to everyone? We're identifying where the banks and institutions buy. We're identifying where the banks and institutions sell. We're not chasing the initial impulse caused by the banks. We're having the patience to wait for price to come back to these levels to then evaluate if we have an opportunity to buy and sell together with the financial institutions. Cool. I'll show you right now, Zashel. I have some questions. Would you be able to spend some time one-on-one with me? User, are you a member of Phantoms? You can buy through dark pools, Dr. One. Let's keep going. Well, so we got our monthlies. We just started doing analysis here on Spy Guys. So we'll look at more analysis right now, you. Let's drill down to the weeklies. Yeah, just give me a call, man. If you have questions for me, just give me a call. You can shoot me an email, give me a call. Everybody who's a member has my number. Here I am on the weeklies. First thing I want to evaluate on the weeklies is my trend. What is my trend here? Is this an uptrend, a downtrend, or a sideways moving trend? The workshop is tomorrow night, correct? Two-laced. Workshop is tomorrow night at 7 p.m. Eastern. 7 p.m. Eastern, 4 p.m. Pacific. I give you both those times because sometimes people get confused whether they're earlier or later than Eastern. No problem, brother. This is still a downtrend here on the weeklies. Can everyone see that? We are establishing lower lows, lower highs, lower lows, right? Lower highs. And so far, we're in that corrective phase. And that's where we are right now. So we are currently still in a downtrend. What does that mean for us as traders? Well, that means ideally we would like to go short. We would rather trade with trend than against trend because trend trades are higher probability trades. Thank you, nobody. Yeah, I'm still trying to get used to. By the way, guys, if it's a little more janky than it normally is, it's because I'm trying to get used to watching multiple chats simultaneously. When a gap happens at the close of the market, should that also be marked as a demand or supply zone? It would depend on the structure, Shafaf. Like it's not just across the board, every gap is going to be supply or demand. I'd have to see the structure of the gap. What is a dark pool? A dark pool is when a bank transacts directly with another, like a financial institution transacts directly with another financial institution. So let's say Goldman Sachs calls up Berkshire Hathaway and says, I want to buy 10 million shares of Apple. What price will you give me? That would be them transacting directly with each other. It still has to be reported to the market, so it will still cause price action in the charts, but it will hide the volume from you. That's why they do that. Do we see 524? I don't understand what you're asking me in that regard. Well, it's going down. It's better to buy the dip. That's not how I trade. I buy where banks buy, sell where banks sell, two laced. I don't just try and guess random tops and bottoms. How do I identify where the banks buy? Well, let's do that right now. All right, so here we are on the weeklies. Do we have any clear institutional order flow here on the weeklies? Well, I have this structure right here. Impulse, balance, impulse. Can everyone see that structure right there? Volume can be hidden through dark pools. Correct, Chops. Can everyone see that structure? I have impulse of movement down. Then I have this basing candle, equilibrium. Buyers are buying, sellers are selling. Price is not really moving. And then impulsive movement down. Cool. I'm afraid not, Cole. I only do it live, brother. I only do it live because I find that if I give people recordings, they misinterpret stuff. Like I was going to have a recording available for everyone on YouTube. And then literally the day before I was going to release it, I had a workshop that was live, and I taught something in the workshop, and one of the guys in chat said, "So what you're saying is this, and it was literally the exact opposite of what I just said. And I was like, "That's the exact opposite of what I just said, man. Every single thing you just listed is the exact opposite of what I just said." And then what it taught me was, if these are not members, if these people, if like let's say I have one exposure to this person, potentially, right? I got to be there to be able to answer questions, because it's amazing how people can misinterpret stuff with biases that they have in their minds from watching YouTube videos, you know? So it's just because of that. You can blame that one guy, but I'm actually thankful to that one guy, because I think about it, like how many people, if I just put that video out, would have misinterpreted stuff and been like, these guys don't know what they're talking about. And it's like, well, we've been trading, man. we do this for a living, but you know, you have always that potential with people that aren't necessarily knowledgeable of what they're looking at, right? So it just taught me, okay, if you're only gonna have one exposure to a person, you got to be more careful. I don't think you can learn to trade from a books, brother. Exactly, nobody. Like we were offered to a publishing deal several years ago, and I didn't put out a book exactly for that. Is it impulse based on the size of the candlestick? An impulsive candle will simply be a candle that has imbalance. It doesn't necessarily have to be the size. Size does matter to me in terms of strength and movement, but it's not the size of a candle that makes it necessarily an indicative of order flow, right? Like here we have a bank selling right up here. This is the continuation of that movement, right? So I'm looking for this structure. I'm looking for impulsive movement in, equilibrium, and then impulsive movement out. Because think about this in terms of price action. What's happening, right? On the psychology trading, there's some great books on the psychology trading, man. Trading the Zone is a great book on the psychology trading. I've heard Best Loser Wins is very good as well. I've personally never read it, but Mr. Blue, one of the other Phantoms, says it's great. The title is great. So those are books that are very good on the psychology trading. It's just actually learning trading techniques. Trading is very experiential. So like to me, trying to learn to trade from a book is like trying to learn to swim from reading a book. That's the way I think of it. Like you can learn the physics of it, but that's not the same as knowing how to swim. You know what I mean? Why would I do that, user? Why would I be willing to do that? Yeah, I can't find it. There you go. Sorry, man. You'll have to keep looking. What's the deity that they say? The saint for finding lost things. There is a shell. If anybody's interested in taking advantage of the anniversary promo, just shoot me a message and I'll send you the promo code. Because we're doing the 44 to 50% off promo for any new members. Nice. There you go. So Sellers were in control, pushing price action down. Then we had a brief period of time where buyers buying, sellers selling, price was not moving. And then suddenly we had an impulsive movement down, indicating an imbalance of more sellers and buyers. The only way price can explode down like that is if there's an imbalance of more sellers and buyers. Now, why is this likely institutional? Well, it comes back to what we said before. For you to cause major price action in something as heavily traded as SPY, you have to be placing a very large order, right? If we were to go and short sell 100 shares of SPY here at the limit price of 594, would that cause SPY's price to drop like that, guys? If we short sold 100 shares. I mean, kind of transcendent. I think paper trading is useful for learning where the buttons are. I don't think it really teaches you. Yeah, Shafaf. I mean, my prerequisite to the publisher was I would have to put an intro in the book, a forward in the book saying you will not learn to trade from this book. You will learn more about trading techniques, but I can't teach you to trade from a book because trading is experiential. And the publisher was not on board with me doing that forward. They're like, that's going to defeat the whole purpose of the book. I'm like, well, I'm not going to lie about what trading is just to sell a book. And that was the end of our book deal. That's how it went. Not at all. Won't even show up a blip on the screen. We'll move absolutely 0%. I can't tell you how much to put in an account on Omnivism. I can give you an idea of minimums that most brokers require, but I can't tell you how much to put into an account. That's against federal law. Still very small order user. 1,000 contracts is nothing. Take it easy, user. Very small and significant order. For you to cause this level of price action, you got to be placing big boy orders, right? Millions of shares, millions of contracts, millions of lots, or at least hundreds of thousands, big positions. So this isn't us. This is a large financial institution placing a large sell order, right? Oh, what's it called? Goldman Sachs came along, said, I want to short sell 20 million shares of SPY here at the limit price 594. They placed this massive sell order into the market. But because there are only so many active buyers, they only filled a portion of their order before eventually they exhausted all buyers and they were left with this massive pile of sell orders. And because there was an imbalance of more sellers and buyers, price exploded downwards, right? So you're just seeing imbalance. Same thing here. Equilibrium, massive imbalance down. On the buy side, we have this area of institutional buying right here. We have this little continuation pattern. This one's a little harder to see, so if you have a harder time with it, I get it. Impulse up, balance, impulse up, right? Rally, balance, rally. Area of institutional buying. We have gapped out of that and come back in and tested it. So it's already been hit once right here. And then we came back in a second time, hit the monthly level as well, and bounced back up a second time. So it's been hit twice already. Finally, we're going to drill down to the dailies, and this is where we look for actual entries, guys. So we start on a higher time frame, we drill down to an intermediate time frame, and then we go down to a lower time frame. We're always looking at a minimum of 3 time frames. Right now, I have 24 on my watch list, two laced. We can go look at NVIDIA, El Crypto. Let me just put it on the list, brother, so I don't forget. NVIDIA. There you go. Hold on, there's my mouse. Multiple screens. It's so weird without the music. I'm so used to the music. It's so strange to not have the music going. All right. So now we're down to the dailies, and this is where we're actually looking for entries. This is where we're looking to actually get into a trade, right? So our trend is down, which means ideally we would like to go short, right? We'd rather trade with trend than against trend. And we want to look for the same thing we're always looking for, areas of institutional order flow. I do not, Chico. I think people put the cart before the horse with prop firms. I think if you are not a consistent trader, there's no reason to try and pass prop evaluation. Like prop firms to me are, you are a consistent trader and have been consistent for a while, but you just don't have a big account. That's when prop firms are useful, because then they lend you money, which allows you to grow your account more quickly, right? But if you're still in the learning phase, or I'll even put it more bluntly, if you have difficulty passing evaluations on prop firms, you don't need a prop firm yet. Like prop firm tests are not difficult, guys, not for traders. So if it's difficult for you to pass a prop firm test, that just means you're not ready for a prop firm yet. That's the best way I can put it. Does that make sense? Like their tests are not difficult for traders. So if people are still struggling, if they like try and sometimes they pass and sometimes they fail and they just hit drawdown and blow accounts, they are not even close to being ready for a prop firm. That's like somebody who's trying to learn to play guitar and then they're like, let me go buy this $10,000 Fender Strat. And it's like, you don't need a $10,000 Fender Strat. You can go use that $100 Yamaha for right now, learn to play guitar first. And then once you are a guitar player and you're good at it, then you can evaluate whether it's worth going to buy that $10,000 Fender Strat, right? Yeah, most people, I mean, you got to think most prop firms make their capital off of people failing. That's how they do it. That's literally how they make their capital. So it's like, don't fall into that trap of the way most people use it, because most people try and use it and they just try and like, essentially, I can't use the word here on social media, they G trade on these prop accounts to just try and, you know, cross their fingers that they manage to pass evaluation. And then they go and play with this as if it's monopoly money. And then they just hit drawdown and blow the account. So they basically, they're just giving their money away $100-something at a time, or whatever the evaluation fee is. But that's not the way you should be using it, right? That's not the proper way to use a prop firm. You want to check out BTC? We can check out BTC, man. How do you draw the sell side at 548? That's going to be in a lower time frame, brother. All right. So here on the dailies, I have this beautiful impulse, balance, impulse. Can everyone see this structure right here? Give me a yes if you can see it. If I stretch it vertically, it makes it easier, right? Impulse down, equilibrium, big impulse down. What are you seeing right here? Some big banker institutions sold and sold heavily here, driving price action downwards explosively on SPY. But when this financial institution sold here, guys, did they fill all their sell orders? Were they able to fill all their sell orders? Thank you, Shark Boy. Yeah, Chico. I would say it's, yeah, thank you, Shafaf. I would just say it's better to wait until you're consistent. Mr. Blue, one of the other Phantoms guys, it took him about 1.5 years to get to a point of consistency with his trading where he could count on it as a stream of income, right? And so then he was a consistent trader. Like, he was consistent. He was hitting his profit targets week in, week out after wins and losses. But his account wasn't that big. So he actually went and worked at a prop firm, like moved to New York, worked at a prop firm on the floor, right? One of those, you know, the original form of prop firm where it wasn't you passing evaluation, where you were actually hired if you were a trader. He worked at a prop firm, worked there for 2 years just so he could build up his account to the point where he could actually make a living off of his trading. So that's how I think of using a prop firm, right? That's the proper way to use it. Take it easy, nobody. Now the structure is a little more favorable, but you know. So some banks sold heavily here, but they weren't able to fill all their sell orders. Why do we know that? Again, it comes down to structure. If they had filled all of their sell orders, price would have continued to consolidate and move sideways, right? The fact that we have this massive impulse down tells us as analysts that there's an imbalance of more sellers and buyers who are driving price action down and likely leaving behind unfilled orders sitting up here. Not only that, but I'm also refining my structure. This is the daily. This big red zone behind is the weekly. So now I have daily, weekly correlation, zones on top of zones. And do we like zones on top of zones, guys? Take it easy, Shark. 100% crypto. So all the orders aren't filled if it's not a full candlestick. I mean, it's this structure is what I'm looking for you. So if you're asking me if every doji is an indication of institutional order flow, no. I want that full structure. I want impulse, balance, impulse structure. We love it, right? We love zones on top of zones, because think about what it means if I have zones on top of zones. If I have multiple time frame correlation, if I have multiple banks and institutions selling at or near the same price point, the area in which their order blocks overlap each other, right? The area in which their order blocks overlap each other will form an even stronger level of imbalance. Does that make sense, everybody? I have stronger correlation where the order blocks overlap. Did you start off as a retail trader, then became professional? I mean, technically, yes, Shafaf. I mean, because I started trading stocks at 17. Like, I couldn't even open my own account, right? My dad set me up with a custodial account. But I interned at the investment firm at 18, and that's when I started to learn trade properly. So in college at 18, it was when I first interned at the investment bank, and that's when I started to learn trade correctly. So I started learning proper trading at a young age. We already did, Mason. We checked it out. There was nothing on it for us. So they sold heavily here, driving price action down. Beautiful multiple time frame correlation. Now, what are we going to do as traders? We're not going to chase. We're going to have the patience to wait for price to come back. Because when I come back into this level, I'm going to hit this massive pile of unfilled sell orders. And this is where we're looking for an opportunity to get into the trade. This was the last trade I took on SPY, to be clear. that first retracement back to this major level of institutional order flow, this is our best opportunity. Because when I come back into this level for the first time, what's going to happen? I'm going to hit all the unfilled orders that these financial institutions weren't able to fill initially. So I'm hitting this massive pile of unfilled orders, this Venn diagram of unfilled orders. And because there's this huge pile of unfilled sell orders, more sellers and buyers are going to cause price to do what, guys? We teach people, I don't know how to call you. I'll call you emoji man. Cool, Jam. I'm 45, Shafaf. It's going to hit that huge pile of unfilled sellers, and they'll fill a few more orders, right? Every time we hit a zone, we're filling more orders. But eventually, if there are more sellers and buyers, price is going to go down. And that is where we get in. This is where professional traders look for entries. Give me yes if you're tracking. Give me yes on Instagram and YouTube or a like or whatever on TikTok. Let me know if that makes sense to you. We're seeing where the banks sell. We're not chasing. We're waiting for price to come back, especially when we have multiple time frame correlation like this. And then we're taking advantage of the bank's deep pockets, taking advantage of their unfilled orders and selling with them. That's it. That's all it is. That's all trading is. I mean, that's not all trading is. That's not all trading is, but step one of trading. That's all step one of trading is, guys. They already went short, right? Dominica, they already went short. We're just seeing where they place their orders. Again, how does price move? How does price move, brother? There's only one way price can move. How did price come out of equilibrium and move down like this? What's the only way price could move down? If you're on your first day, you're overpaid for stock, should you sell at a loss and start over? I mean, ideally, you should already know your risk management before you enter a trade, right? You should know that ahead of time. You should already have calculated your entry, your profit target, and your stop loss before you enter the trade, because that's how you determine whether a trade is actually worth taking, right? Trading is all about risk management, guys. It's not just about finding high probability trades. Of course, it's important to learn how to read charts and find high probability trades, but it's also about making sure you're taking high probability trades that have low risk with high profit targets, right? That's a very, very important aspect of trading. You have to be selective with which trades you take. Not all trades are worth taking, right? So like this trade right here, for example, this is on a 4-hour level. It's a fundamentally driven level, and it came back in and it did reverse back out. Because it was fundamentally driven, we would have waited for a confirmation on it, and you would have gotten the confirmation right here. But at this point, I would never have taken the trade because this is institutional buying right here. So my risk versus my reward would never justify taking that trade. And it's a good thing because if you look at it, it came right back up, right? So there's a lot more beyond this stuff, guys. I don't want you guys to think like all this stuff I do on social media, just to be clear, this is just step one of trading. This is like if I was teaching exactly, Willinson, if I was teaching the alphabet of trading, all of this is the letter A, guys. So is it an important letter? It's a very important letter. It's the first letter of the alphabet of trading. It's very important to understand this stuff. And if you don't understand institutional order flow analysis, like if you don't understand how to do what I'm doing here, you probably shouldn't be trading because this is step one of trading as a professional trader. This is like the first thing professional traders do is mark off IOF, right? So it's like you want to understand A before you move on to B. Does that make sense, everybody? But there is still B through Z. There's a lot more analysis that goes into determining whether a trade is worth taking or not beyond just this. Most zones are not tradable. So I don't want people like leaving these lives and being like, oh, I think I get it. Impulse balance, impulse price comes back. Bam, I'm in. It's like, no, there's so much more to it. That's just step one, right? If you just trade off just IOF without doing any more analysis beyond it, you will lose money. So I don't want you guys to hurt yourself with a little bit of information, but I also want people to have a better understanding of what it's like to trade at a professional level, because then they can see if it's actually something they want to pursue, right? I don't want people trying to take shortcuts towards trading. It's not going to help you in the long run, right? So you got learning to trade is something anybody in this room can do. Any one of you guys can learn to trade if you want to, because it's very process oriented. It's very systematic. It's not a matter of intelligence. As I'd like to joke, guys, but it's not really a joke. I know many morons that are great traders. You don't need to be a genius to trade, but you do need to be willing to put the time and effort in to learn how to trade. And that's why I tell people I think of it as more akin to like learning how to speak a foreign language or learning how to play a musical instrument, right? And what I'm saying with that is If you want to learn to play a musical instrument, if you want to learn to speak Italian, can you learn to speak Italian? Anybody can learn to speak Italian, but there's no shortcut to it, right? If you buy a Berlitz textbook on speaking Italian, you read through the entire textbook this weekend, are you a fluent Italian speaker on Monday? Nope. But I read the entire book, Mr. Black. Doesn't matter. You are not a fluent Italian speaker on Monday. You might know more Italian than you do now, but you are not indistinguishable from someone born in Firenze, right? There is no shortcut. There's no shortcut. There's no shortcut to experience, right? Same thing if you wanted to learn to play golf. If you met Tiger Woods and you said, hey, Tiger, can you show me the proper way of swinging a golf club? Could Tiger show you how to swing a golf club properly? Sure. But if he just showed you how to do it, do you now golf as well as Tiger Woods? No, because you got to go practice it, right? And that's going to take you a while to get that skill set down. Exactly, Clippy. It's the effort is where people fall short, because they want trading to be easier than it is. They want it to be something that they can kind of just casually pick up in a month or two, or like where I'm seeing most retail traders give up is usually about the 6-month mark. And I always find it crazy because people will go and work for jobs for like 30, 40 years. And then they'll be like, oh, more than 6 months of effort. And it's like, this is one of the highest paying skill sets in the world, man. If you're not willing to put more than 6 months of effort into it, don't bother doing anything in life. Everything that's worthwhile is going to take you more effort than that. That's just the reality of it, right? If everything is something where you give up instantly, did Michael Jordan become Michael Jordan in 6 months? Did he just play basketball for 6 months and all of a sudden he was Michael Jordan? Or did he put a little more effort into it than that, right? You don't become great at something if you put minimal effort. You got to put more effort into it. And that's not trading. That's everything in the world. Anyway, what's the whole point of all this? This level I'm not willing to trade. It's already been hit once, bounce, twice, bounce, 3 times bounce, 4 times bounce. I'm not willing to trade. It doesn't matter to me because that's institutional buying right there. And we didn't break the demand zone. That's why I have this yellow line here to see if we broke this little mini demand zone. So the only trade that's even remotely viable for me right now in SPY is this 567.08. We did take the first time it hit right here. So now if it comes back in, I will be treating this level differently because it's already been hit once. I don't know how many unfilled orders are left. I think there's still a high probability of unfilled orders. But if price comes back to it, I would wait for what's called a confirmation trade, which means I would want to see a candle close reversal out of the zone, confirming that there's still unfilled orders, at which point I would then evaluate my risk to reward ratio and then see if the trade is actually worth taking. Is everybody with me on that? Give me yes if that makes sense to you guys. Cool, cool, cool. So that's what I'm looking for right now on SPY. Nothing new for me beyond that. I'm not willing to trade the demand again. It's already been hit more than once. This is quite possibly the worst thing to give up on besides yourself. I agree, Transcendent. I agree. The number of times I see people give up way like so early, I'm just like, dude, you know, it's the worst is like for me from a perspective because I can't tell you how long it's going to take you to learn, right? Even if I had an idea, it's still illegal to do so. But the worst thing is seeing someone who's like really improving and then they give up before they get there, you know? And it's just like I don't bother trying to convince people because if people have given up in their hearts, they're not going to put the effort in anyway, you know? But it's just like it's sad for me from perspective when you see people starting to get better and they're like, oh, I'm gonna have to take a pause in my trading for a while. I just got a lot of stuff going on. It's like, yeah, well, cool, man. You know, stick with it. I hope it works out for you down the line. You know, come back into it. You know, but it's just like, what else can you say to the person, man? You can't make the person do the work. Either they want to do it or they don't. That's why I encourage people to think about why they actually want to do it, right? Like if you have a real motivation for doing it, you want the Qs private? Sure. Let me go put the Qs on here and the tickers. If you have a real motivation for putting the work in, you're more likely to stick with it. If you're just kind of casually doing it as like a hobby, less likely to stick with it. You can do it from anywhere. There's an internet connection. 100% transcendent. I agree. Different brokerages for different asset classes. 5 in co. What asset class are you asking for? Self-paced learning. Yeah, 100%. Euro dollar gain, James? Sure. Let me put on the list for you, brother. Euro dollar. There you go. All right. So let's go look at Apple here. Apple, I mean, this supply is just broken right through, right? Just gone, just like that. And this is where risk management is always critical. Could we have potentially taken a short on the supply zone, guys? Is that a supply zone that we would have potentially considered taking a short on? Let's go look at the weeklies. right? Could we have considered taking a short in that supply zone? For those of you who are Phantom members. Thank you, Transcendent. I like trading because of freedom. That's exactly why I liked it, Clippy. We already did GC reach. Oh yeah, BTC. Sorry, brother. You did ask me that. For futures, most of our members use TradeOvate nowadays. For futures, BTC price action is better used when a zone has been touched once. So the second time you use price action. No, I want to be there for the first retracement, Shafaf. I do not want to be there for the second retracement. That's when more traps are set. Ideally, is the first hit. First hit is our highest probability trade. Tesla. Yep. Sorry, I'd asked a question. I don't even remember what I asked anymore. I got distracted between all the different chats. I was saying, would we have considered taking this short on the dailies? Would this short have been a consideration for us? Phantom members, what do you think? Would that have been a potentially viable short for us? I don't know what an AOI is, my man. There's no correlation. That's true. But I'm just saying, just in terms of, we don't need to have a correlation. Area of interest. I mean, what do you consider an area of interest? I mark off areas of institutional order flow, Amanda. Like, that's how we're trading. Where the bank's buying, where the bank's selling. This would have been a trade that would have been a potential opportunity. We would have considered this short, right? And this is a great example of how just because we're marking off areas of order flow, guys, it doesn't mean every zone is going to work, right? This would be an example of a zone where I would have considered taking the short. I would have been interested in it. And what would have happened to me if I took this limit order here? I just would have gotten stopped out, right? We're not going to win every trade we place, guys. There's no such thing as the perfect form of trading where you win every trade. Trading is not about winning every trade. You will not win every trade. It doesn't matter how much effort, how much time you put in, you will definitely have losing trades because trading is simply probability analysis. We are looking for high probability trades, right? Was this a high probability trade? It was. It was a high probability trade. It was consistent with trend. It was good strength of movement. It was a nice gap out, hadn't been retested. This was a trade that would have been a worthwhile trade in terms of an opportunity for us. Would we have made money on it? No, we would have lost money on it. Oh, well, that's what stop losses are for, right? It's not that you're going to win every trade. You're in New Zealand? Sure, we can check it out. It's not that you're going to win every trade. It's that you're going to make sure that when you lose less than when you win, right? Professional traders have winning trades, right? We have winning trades and we have losing trades. We do not win every trade we place. What we do is we look for high probability trades that have low risk with high profit targets so that when we lose, not if we lose, when we lose very little. And then when we win our trades, because we're looking for trades that have profit targets of like 3, 4, 5 times our risk or more, one winning trade makes up for multiple losing trades. And that is the foundation of trading. Trading is risk management. It's about discipline, never over leveraging, never over positioning, never getting emotional about a trade. If I had a trade exposed here, would I be concerned if it stopped out and stopped me out? No, because what's the most I would have exposed on an individual trade, guys? What's the maximum value at risk that I would have on an individual trade? I don't think so, Sam. It seems to have gapped right through it. I would have had my limit price right here. 2% max. For me personally, I don't exceed 0.5%, right? But most professional traders will never exceed more than 2% maximum exposure. And that is how you put yourself in a position where you live to fight another day. If you follow these simple rules of risk management, never exceeding more than 2% value at risk, only looking for trades that have high proportion of profit targets, right? High probability trades, of course, but high probability trades that have good proportion of profit targets, a good reward to risk ratio, ideally 3 to 1s or higher. You can actually be wrong 75% of the time and break even. That's what trading is like, right? Does that make sense, everybody? All professional traders lose trades, guys. Vanguard loses trades, BlackRock loses trades, State Street loses trades, UBS loses trades, Fidelity loses trades. If the largest investment firms in the world, the ones who control literally trillions of dollars, if they lose trades, then it stands to reason that we too are going to lose trades, right? Because all we can do with our chart analysis is determine whether a trade is a high probability trade. It's never a guarantee. It's never certainty. It's whether it's a high probability. If you have something that's a 70, 80% chance of winning, that's still a 20, 30% chance of losing. So it's not losing. It's being good at losing. It's making sure that when you're wrong, you lose very little. And then when you're right, you maximize your profits. That is trading. Yeah, whenever you see these morons on, Facebook or whatever, they're like, I win 100% of my trade. And my favorite is when they say like 99% win rate, as if that's like something that would impress anybody who actually trades. Like I always find it hilarious because like I said it to a guy the other day. I was like, this is a while ago. Because I always like to troll those guys where they're like 99% win rate. Join my signals group, I'll be like, only 99%. Ugh, I only like people that do at least 100% or more. And then like so often they'll come back like, well, like, no, most of the time we do 100% or more. Like, oh, even more than 100%. Well, that's even better. I love to win more than 100% of the time. It's just like, they don't even understand that I'm making fun of them because they have no idea what they're talking about. They're just trying to sell some people on some BS, Anyway, that's an example of a trade where we would have lost. Oh, well, that's what the stop loss is there for. I don't know if we would have lost because we would have had a limit order. And since it gapped through, I don't think it would have triggered the limit. So it would not have triggered our price because it never hit the 201.86. It actually gapped through it. So we might have never entered the trade. And if we paid attention to it, then we would have canceled the trade as soon as price was above. But you would have had to been paying attention to it, right? But either way, whatever. Yeah, let's just say it did hit. It doesn't matter. It's not about whether you win or lose. It's about making sure you're taking trades that have low risk with high profit targets. That's the point. So what do I have right now on Apple? Well, I have this demand zone right here. I have this demand zone right here with good strength and movement, good impulse, broke past opposition, right? And what's also interesting about this zone here, guys? What's another interesting aspect of the zone? What's something I like about this? I know it's all over the place, right, man? It's all over the place, dribbles. What's something I like about that? Is there something interesting about this for us? Good in terms of purity. What else? Yeah, reach. Look at that beautiful, beautiful breakaway. Strong imbalance. Strong imbalance. Now, is there anything we should be taking into consideration here that could be affecting some of this market movement? Did anything happen recently, fundamentally speaking, that could be affecting market movement? Yeah, we have fundamental movement happening, right? This was just a little bit before that, though, right? This was on Monday. Fundamental movement was yesterday. So this is kind of interesting that just a day before the announcement happened, somebody already started buying. Isn't that amazing? It's almost as if whatever financial institution this is knew that this was going to be happening. But of course, that's not possible. They would never do something like that. That is extremely, extremely illegal to use inside information. So I would never accuse any financial institution of ever doing anything like that. This is probably just a coincidence, right? But either way, there it is. There's an imbalance in order flow, driving price action up. Somebody with a whole lot of money bought a whole lot of Apple, creating a huge imbalance, a nice breakaway gap, driving price action up. So if price does come back down to this level, this could be a potential opportunity for us to go long here at 193.27. And now, since we broke through the supply, how are we looking for risk reward, guys? We're looking clean. Clean. There's nobody in my way here, right? Just a coincidence. I will say, guys, I worked at one of the biggest investment firms in the world. I never once saw them do anything even remotely non-compliant. Quite the contrary. They were hardcore with compliance. Like they were really like, if somebody, went a little on the edges of what they said or something, like they would come down hard on the person. So, but was I, inside the meetings with the CEO? No, I was not in those meetings. The only time I ever got it, I did have one time when I was a kid, they flew me up to New York because they wanted me to work on the bonds floor. And they wanted to see if I was interested in working the bonds floor. And I could not hang with those guys, man. Those guys live a hardcore life. I don't know how they handle it. Yeah, alleged. Exactly, Shafan. Alleged. But that was the only time I ever sat in a meeting. That's the only time I've ever in my life had to sign an NDA. Was in that meeting. I couldn't discuss any of the things they discussed in that meeting. And it was just really interesting to see how they talked about trades and price action and movement in the market. Like, dude, it's just when you get to that higher level, because that was the only time I was in like with the CEO of the company, you know, and it's insane. Like it's impressive the way they talk about the markets are very different because they have the capital to drive price action. So they talk about it very differently. Nothing to see here. Move along. Exactly. Is it? I didn't know if there was an expiration. It doesn't matter. I don't even remember what stock specifically. I just couldn't talk about any of those assets that they were trading. Uriah. Why does it look different? Do you have extended trading hours turned on baked? You might have ETH turned on, and that'll screw your zones up, brother. You don't want to have ETH turned on. Um, I'm sure they were very good, but that wasn't the part that was tough for me. Like the part that was tough for me was like bonds. For those of you who don't know, you have to get in earlier. It's earlier than the rest of the market, so you had to go in earlier. I think 7 a.m., 6:30, maybe 6:30. I don't remember anymore. This is 20 something years ago. They get paid very well. Like it's a higher salary than I had working equities down in because I worked in the Miami office, right? And I was happy with my salary, to be clear. I was happy with my life and everything, but they get paid more. Like bonds is probably the only place as a young trader where you could potentially at a major investment firm. I'm talking big boy firms, right? Not like small hedge funds. Where at a big boy firm you could potentially hit 7 figures. Hard, like probably higher 6 figures than 7 figures, but you could potentially hit that, right? Um, and in equities, like there was no way. Like even with max bonus, max everything, you would never hit 7 figures as in your first few years as a trader for the company. Like they didn't share commission that way. So different. So what a lot of people would do is they would go to a major firm, right? One of the big boys, work there for a few years to get the credentials, to get the expertise, and then they would go try and be hired by a smaller hedge fund because the hedge funds would actually share commission. So they would actually pay you commission off what your earnings were. So that was kind of the trajectory for a lot of people. Like go, pay your dues, so to speak, at the major firm so that now you're qualified to get hired by the smaller firm. Right. And that's the way it worked for a lot of people. Oh, I have no idea, man. I couldn't tell you if it's going to go up or down, brother. It's not an ability I have, man. I can't see the future. But it's just down here in the lower right, brother. You see where it says right here? It'll just show you RTH or ETH somewhere around here. Why is it not showing up here? It's usually right here. I might just be because I'm screen size a little tighter. That's probably why. Working for the banks. So it depends on the investment firm, man. Some banks will allow you to do it. Some banks will not. I've known some firms that don't allow you to trade at all. Most of them won't allow you to trade what you trade for the company. Right? Most of them won't allow you to trade that makes sense. Won't allow you to trade what you trade for the company. So like they would sector us out where I worked. They would sector us out into different sectors. So I did intermediate long-term positioning specifically for pharma and for tech. So I could not trade pharma or tech myself. Like I was not allowed to in my own personal account. So like when I first got assigned to those sectors, I was like, oh, look at me getting the big sectors. Man, they must really have a lot of confidence in me. And then later I learned like, no, that's what they give the new traders because you can't trade whatever you trade for the company. So it wasn't their tremendous faith in me. It was like, oh, you're the new guy? Well, here's your crappy sectors that you have to trade because now you can't trade it on your own personal account. Like it wasn't a good deal. It was a bad deal. But I thought I was like, wow, they must really think a lot of me to give me these very important sectors. It's the exact opposite. It's like, hey, low man on the totem pole, you get the sectors that you can't trade. So we learn more as you're working there. I lost connection. Oh, it's weird. It didn't even show it for me, man. Usually it shows me like iffy connection and stuff. How would you decide an expiration date for your strike? So Geo, I'm trading directionally, right? When I trade with options, I'm trading directionally. So I really just don't want theta eating into my contract. So I'm normally doing at least 90 to 120 days out in terms of expiration, because I just don't want the theta eating into it. I'm not like doing like shorter term trades the way Blue does. Like Blue will go through the whole price slicing and stuff like that to try and optimize the return on his contracts, right? Because he's shorter term trading. For me, I don't care. I'm a directional trader because my background was I was a stock analyst. So I just use the options for the leverage. I don't really care about like, oh, but you could have made just slightly bit more if you, instead of you doing this, you did this many days. It's like, oh, dude, I don't care. It's a small difference. I just want the leverage, So for me, from my perspective as swing trader, it's not a big concern for me. I'm always in trades, Yoko. Always in trades, brother. So I just don't want the theta eating into my contracts. That's all. But in terms of like doing it properly, if you want to go on price slice all that, I mean that's Blue's world, right, brother? Anyway, interesting potential level there, 193.27. I like it. It's an interesting potential level there in Apple. They track it, Shafaf. Oh, they track it all, brother. I had one time, the only time I ever had, like, there was like an internal investigations department in the firm. And the only time I ever had any interaction with the internal investigations department was a trade I had placed for the company. One of my college friends, I wouldn't even say like friends, like acquaintances. Like I knew the kid, I knew him from college. He had placed a trade on that same asset. And so like I'm in my office one day and this guy who I don't know comes in and he's like, yeah, I forget what they call it. It's like, their version of internal affairs, right? Whatever. And he's like, yeah, I just wanted to talk to you a little bit. Do you have a few minutes? And I'm like, okay. And he's like, do you know a guy named John V? I won't say his last name. And I'm like, yeah, from like college. And he's like, have you spoken with him recently? And I'm like, I've not spoken with him since college. He's like, not at all. No text, nothing, nothing, no phone calls, nothing, no emails. I'm like, no, I haven't talked to him since college. He's like, you're sure? I'm like, I'm 100% sure. And I'm like, why? He's like, he placed a very significant order on something that you did for the company. So we just wanted to make sure that there wasn't any issues with that. And I was like, oh, no, I haven't talked to him in years. He's like, okay. Oh, cool. Then as long as there's nothing there, then you'll be fine, and you don't need to worry about it. If we find anything that's of concern, we'll contact you back. And I was like, all right. I wasn't really worried about it because I hadn't talked to the kid. How do they know that? How the hell do I know, dude? Like, I have no idea how they track this kid that I did live with him one of the years in college. So maybe just because I had lived with him and he was a roommate at one point. But either way, they tracked it. How big an order he placed? They never told me. They never told me anything about it. That was the entire interaction. Never heard it again. Never heard about any of it again. You work for Apple? You can't trade for them. So there you go. That's interesting. But they don't give you like options in the company as an employee? We got Euro on the list, all entertainment. Trading with Blue is detailed. Yes, that is accurate. All right, let's keep going. Let's keep going down the list, guys. ES. Let's go look at a shorter term trade on the S&P. All right, here we are. Let's get down to the hourly here. Oh, yeah, that makes perfect sense. That makes perfect sense. Yeah. That's exactly right. That's why, because I mean, imagine from the perspective of a trader, man. If I knew the company I was working at was about to buy, 15 million shares, 20 million shares of an asset, that's a huge benefit, right? That's just a huge, huge benefit. Yes, exactly right, Baked. Exactly right. All right, so here we are. You can see this supply zone. We had already hit it once, bounce here. We hit it a second time, bounce, hit it a third time, bounce, and then the fourth time we broke through the level, right? What was the only one we would have taken? The only time we would have considered taking the trade was the first hit. Not even that second hit, because low time frames like this are broken all the time. So that's gone. Well, actually, I can clear everything because we have a new structure right here. So what am I looking for first, guys? First thing I'm looking for is institutional order flow. Where are the banks buying? Where are the banks selling? So I have this beautiful impulse, balance, impulse. Nice area of institutional buying. Some big bank or financial institution bought and bought heavily here, driving price action upwards explosively. Gecko deal? What's the Gecko deal, man? You talking about like with Warren Buffett or something? Impulse, balance, impulse, area of institutional selling right here. And you can see that this level has been retested a bunch of times, right? Some big banker institutions sold heavily here, driving price action down. Did they fill all their sell orders when they sold here, guys? Well, they couldn't have, right? If they'd filled all their sellers, price would not have exploded away. So left behind unfilled orders, price came back in, hit the unfilled sellers, popped out, hit the unfilled sellers, popped out, hit the unfilled sellers, popped out, hit, popped, and then hit, popped. So super beat up on the sell side. So if I'm looking for a trade opportunity here, which one am I looking at, guys? Am I looking for a supply trade or for a long position? Which one am I looking at this point? Anna Scott Steele. I would only be interested in the long, right? So I'm going to drill down here, and this is where I'm going to see if I have an opportunity, right? These are my most recent higher time frame levels. I want to have that higher time frame correlation. Oh, Gordon Gecko. And now I'm going to drill down to the 15s. So now I'm looking down at the 15s. First thing I want to evaluate is my trend. But realistically, do I need to spend a lot of time on this chart, guys? Is this worth me spending a lot of time on this chart at this point? How come both candles aren't included? I don't know which one you're looking at, man. Which candles? Are you talking about? I don't know which candles you're talking about. You're not talking about back here, right? Because that's very clear. Impulse, balance, impulse, pivot, reversal. Are you talking about here? Why don't I include the start of the impulse? Is that what you're talking about, Keenan? I know, but are you talking about the demand? Are you saying, why don't I include this green candle? So, I mean, this is one of those things, right? Because of this long wick coming up at the top, could you consider it kind of a base candle? You could, but this is what I mean by understanding structure as well as basing, right? Not every base candle is going to be in an area of equilibrium. Would I really be mad at you if you did that? I'm not mad at you, but I want you to start thinking about it from a more critical perspective. What's really happening here? We had clear impulse in, then we had balance, and what's starting to happen right here? That is the start of the impulse out. Does that make sense? And if I drew in the gap, think about what happened here in the gap. This would be like me having a huge green candle right there as well. So if I draw in that impulsive green candle, right? If I mark that off, if I fill in the gap, shall we say, with candle. Oops, wrong color. Let me choose the right color for you guys. Does that make it clearer in terms of what I mean? All right, impulse, balance, and like huge impulsive movement up. You with me? What's up, Cody? How you doing, brother? The gap below me? Well, we're just looking at what's closest to current price right now, brother. We always start with most actionable trades first. Most actionable trades first, because that's going to be our priority, right? Before I would have to break through this level to be able to trade down here. So this is going to be hit before that's going to be hit. MSTR, sure. Correct. You'd have to drill down. So we always do at least a minimum of 3 time frames, guys. We start from a top-down analysis, right? Top-down analysis. So anyway, does that make more sense, man? Why I'm drawing it this way? Right? Because this is the start of the impulse out, and then it continues really, really strong impulse movement up with that big gap there. Cool. But again, would I be mad at you if you dragged it around? No, I just want you to start thinking about tighter structure, better levels for yourself. What's up, Sean? How you doing, brother? All right, so what I was saying here on the 15s, now that we're on the 15s, you can see that we impulsed out of this area, right? I'm just going to move this over so you can see it. We impulsed out of this area, and then we came back in and retested it, right? So like, think about what's happening there. I have impulsive movement up. I have essentially basing, and then I have more weak impulse, but still an impulse up right here, right? Pushes price action up, all the way, basically hitting these unfilled sell orders, and then pushes back down into demand. So what am I really doing at this point? I'm basically retesting this level right here. And unfortunately for me, that kills the level for me. It's already been retested on the 15s. So I wouldn't even bother doing any more analysis on him, man. And this is what kind of sucks about futures sometimes, right? Because it's such a fast moving market, for you to get clean levels on hourly 15 correlation, you have to kind of be at the right moment for it, right? Why is my zone drawn to the top of the candle? Because it's not from this time frame. This is the hourly. This is the hourly zone. Right now we're on the 15s. No, all. If you guys want to learn structure of zones, by the way, guys, Blue will be live tomorrow on both YT as well as on IG. Like, he's going to be using the same program, so he'll be streaming on both simultaneously tomorrow. If you want to learn more about how I draw zones, if you go over here onto YT, just /TradePhantoms, right, and you click on playlist right here, there's this Trading Essentials with Mr. Black. All right, and if you click into that, there's this video right here, drawing institutional order flow supply and demand zones properly. So in this video, I explained the 3 different forms of drawing supply and demand zones and why most professional traders draw them the way we're drawing them here. Right? The short answer is more trades triggers with better reward to risk ratio. But I would recommend watching all 3 of these videos if you're not like a member of Phantoms. These are all important videos, but that explains why I draw them that way and why professional traders draw them that way. Cool. So that's a video I put together just for that. So that's it. Supply's already been hit. Demand's already been hit. On to the next chart, right? Let's not waste our time with stuff that doesn't matter. It's done. We got to move on to the next chart. Let's go on to NVIDIA. NVDA. I see others do the order block wick to wick. Is that wrong? It's going to give you more trades triggered. It's going to give you poor reward to risk ratios. So it's not the best statistically speaking, if that makes sense, Craig. Yes, Roger, because it's going to screw up your zones. It totally changes your zone structure. I can't make earnings representations, man. It's against federal law. Yeah, guys. So you'll notice we never talk about how much money we make in the markets. That's not an accident. That's because it's illegal. It breaks this law. If you want to know what law it breaks, just go to federalregister.gov, look up federal law 15 U.S.C. 45, and you can read all about the law and how it's illegal to make earnings or lifestyle representations. So if you're wondering why you never see professional traders talk about how much money they make, it's because if you ever actually worked as a professional trader, you are very well aware of the law because you had to go through compliance training. So good rule of thumb is if somebody's telling you about how rich and how successful they are with trading, that should be a big red flag because that means they never traded as a professional trader. It's illegal either way, but it's also a misrepresentation. All right? Don't follow people who talk to you about how much money they make. If you go to our YT, man, it's just right here, playlists. Right there. All right, so here on NVIDIA, let's drill down to the lower time frames here. I can tell you nothing has changed for NVIDIA for me. We're living inside of this massive, hideous demand zone. There's tons of levels in here. I can't trade any of them because I can't trade a lower time frame short inside of higher time frame demand. So the only trade I have that is even remotely viable right now in NVIDIA is this correlating structure up here at the 139.23. That was the first hit right there. Beautiful reaction off of it. If we come back in here again, we did form new zone correlation there, but we're pretty far away from it, right, man? We're down here at 103. So, but that's all I have. That's all I have right now, brother. That's the only viable trade I have right now. Unless I break through and candle close through this massive demand zone, I can't trade any of these lower time frame supply zones. Is the minimum 103 something you have always done since pro or found to be the best along the journey? Yes, we would do that at the firm, but from a different perspective. That's because they had enough capital to drive the price action. So we weren't really looking at it the same way when I worked at the firm. The firm, when we were looking for trades, it was whether we could control price and how far we thought we could control price. So it was a little bit of a different perspective. It wasn't whether we thought price was going to react to levels. It was, we knew we could drive price action. So how far can I control price action? Is this a worthwhile trade? Does that make sense? It was a little bit of a different perspective. Now trading as a retail trader, I can't drive price action. So I have to understand where the banks and institutions are buying and selling so I can see if I have an opportunity to buy and sell with them. So yes, but from a different perspective, right? They weren't necessarily limiting, but they would start taking profit and shaving off points. And a way you can think of that is like Berkshire Hathaway with Apple, right? They've taken profit a few times on Apple in their trades, but they haven't closed all of their positions on Apple yet, right? They're still in it. So it's just like a little bit of a different perspective in that regard. Does that make sense? Because they actually can drive the price movement. Oh, it's a bummer without the music right now. I mean, it should just show up for you, brother. Like you see right here. Do you see this right here baked? It's just right there. And then if you click on it, see, it'll show you both, regular, extended. That's all. Exactly right. It might just be the time frame you're on. That's what they were saying earlier, because you have to be below the daily. Singing to yourself? Cool, Kevin. So that's what I got for you on NVIDIA, man. That's what I'd be looking at. We can get up to that level again. But that's about it. The Qs. Let's go check out the Qs. By the way, if anybody's new, guys, don't forget, workshop tomorrow night. So if you'd like to learn more about trading, see, I'm not doing my job correctly, guys. I keep forgetting about the workshop. This thing of having 3 live simultaneously, I will tell you, I forget little things like that, like inviting people to the workshop. If you'd like to learn more about trading at a professional level, teaching a free workshop tomorrow night, guys, tomorrow at 7 p.m. Eastern. You can register for free on our website, TradePhantoms.com. Just click this purple register here button. And in that workshop, I will do a deeper dive into this stuff, guys. So I'll teach you a lot more about how professionals trade and analyze the market, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with them, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly so you can reduce your risk, generate high rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it. It's free, costing nothing but some of your time. And if you are interested in becoming a member of Trade Phantoms, you will have a special opportunity to enroll at a discounted rate because it's the last week of our anniversary promo, guys. So it's the last chance to take advantage of the discount if you want us to teach and mentor you and trade live with you and so on and so forth. No, because FX is 24-hour market, brother. Do you have workshop at times suitable for UK? It's the only time I do it, Keenan. We have a lot of members in the UK. And like being a member, because we trade during the day, sometimes that's actually better for members over in Europe. But in terms of the workshop, the vast majority of our members, like probably 90% of Phantoms members, are in the United States. And so I try and take into consideration the time that fits for the most people. You know what I mean? Because I don't want to be doing like multiple workshops a week or anything like that. Like that doesn't interest me. So I don't have enough people in the UK registering for workshops to justify me doing a completely separate workshop just for that group. It's not a big enough group. Like I would say probably maybe we have like 15 members in the UK, you know, out of like 700 something, 15 that are in the UK. So it's just a very small percentage of the overall. So I appreciate all our members in the UK, but I don't do a separate workshop just for that very small number of registrations that we have from the UK. Thank you guys. Appreciate it. Do you guys go live off on IG often? No, we didn't historically for FX Blue. I just started doing it. I would do it like very sporadically because IG, for some reason, man, it doesn't really push to our followers. Like we have like, what, 6,000 followers or something on IG? And you can see it's you and one other person in the room. So like when I would go live on IG, it would just be boring. Like I think the biggest room I ever had on IG was like 30 people, man, or 40 people, something like that. So it just doesn't like, the platform doesn't work the same way for us blue screens. Now that we're using this software that streams to all of them simultaneously, we'll be going on it regularly. But historically, we did not. So now, from now moving forward, yes, like you can expect pretty much daily lives. Like I'm usually live at around noon Eastern most days. So, and if you want to receive an alert anytime we go live, guys, you can join our WhatsApp group. It's free. You can just join the alerts group here. Just go into membership plans and click free right here and receive alerts. And anytime we go live on any social media, you'll receive an alert. And that's all I send you there, guys. I don't send anything else, so you don't need to worry about like, oh, are you going to spam me with messages? Nope. All we send is when we go live on social media and when the podcast comes out. That's all I send on that channel. So you do contracts, I think. Sorry, still very new to all, but you also hold on stocks. Yeah, so for active trading T, I'm going to be using leveraged asset classes like options, or if I want to trade, Forex, then I'd be trading lots and so on and so forth. Thank you, blue screens. Because leverage allows you to reduce your risk and actually generate high rates of return. Like leverage is a very powerful tool when used properly, right? Where people get themselves into trouble with leverage is when they don't know how to use it, and then they over leverage positions, defeating the whole point of leverage. But if you use leverage correctly, you can literally reduce your risk and actually generate high rates of return. So for active trading, I use leveraged asset classes. Now in my portfolio, I trade everything. I trade all asset classes. So I do have stock positions in my portfolio. I have options positions. I have bonds. I have, precious metals. So futures. I have all the different markets, obviously currencies as well. I have everything in there. But for active trading, I mostly trade options and Forex day to day. And, blue trades mostly futures and options day to day. Green trades mostly Forex day to day. Are you using supply and demand strategy here? What's the red boxes? Yes, these are areas of institutional order flow. So supply and demand, but more specifically institutional supply and demand only. Exactly right. I'm looking for areas of institutional order flow specifically. Cool. All right, here we are on the Qs. Let's mark off the dailies here. Was I willing to trade either of these shorts, guys? Who can tell me? I know it's gone now, but I told you before it happened. What did I say about that short? Who can tell me? We literally talked about it yesterday. So before it broke, what did I say about it? Who was in the live yesterday? Nope, not even that, John. Not even a confirmation, because this yellow line, you see this yellow line here? This is demand. This is a big, massively wicked demand zone. There's an imbalance of more buyers and sellers. And so the reason I drew this yellow line was I said, the only way I would be willing to trade either one of these supply zones, either this one or this one, is if this had candle closed below, eliminating unfilled orders left behind in this demand zone. I said we have to candle close below this yellow line for me to be willing to take either of these shorts. And then yesterday, it closed above. Or the day before yesterday, pardon me, it closed above. So when we were looking at it yesterday, I'm like, that is exactly why we were waiting to see if it closed below. Because what happened here is there were enough unfilled orders where it caused price to reverse and come back up. And then we started having a rally the next day, right? We hadn't hit this level yet when we were looking at it yesterday. This hadn't happened yet. We hadn't come back in the supply zone. I said, I'm not going to take either of these because this is inside of oppositional structure. So this one's no good. And you can see now, good thing we didn't take it, right? That's a great reason why we wouldn't take it. And then this one's no good because the risk reward sucks. This is demand right here. I'm going to trade this short just down this demand. It already hit, right? It hit the unfilled orders and reacted back down, but I still would never have taken the trade because it sucks as a trade setup. So great example of why you have to be selective with your trades. And it's because of that impulse, balance, impulse right here. Cool. Does that make sense, everybody? So nothing there for us right now. Realistically, based on the current structure, we have this little demand pivot reversal right here. And that's about it for right now. So what am I more interested in the Qs? That short. That short's not bad at the 41.62. That could be a potential opportunity to go short. And maybe this long, depending on if we break through the supply zone. If I don't break through the supply zone, this long is not viable. Although we did gap out and already retest it once. So if we do trade, it would only be a confirmation. Cool. Does that make sense, everybody? Just rectangle tool. only, just the rectangle tool, brother. So that's all it is. Literally just drawing the boxes. Euro dollar. Let's go look at some Forex. For those of you who don't trade Forex, Forex is the largest asset class in the world. It is the currency market. When you're trading Forex, you are speculating whether one currency will valorize or devalorize against another currency. So biggest market in the world, trades over $7 trillion a day. It is where banks and institutions invest the majority of their money, guys. So massive, massive market. It is more well-suited towards swing trading than day trading because of the nature of how it moves. How you guys doing over there on YouTube, guys? You guys are quiet over there. You know, I can see your chat there too, guys. So you can put in the chat in YouTube as well. I can still see what's happening over there. All right, so here we are on the dailies for euro dollar. Supply zone, we had already talked about the supply zone. We'd said we've hit the supply zone multiple times. We're not messing with it, right? I'm just going to squish it down so we can see it. We hit it once here, popped out. Hit it twice here, popped out. Came back in, hit it here, popped out. Came back in, hit it here, popped, hit it again, popped, and then broke through the level, but didn't break the higher time frame structure. The higher time frame still holding, and then drop back down. So we already said beforehand, we are not willing to trade anything inside of the supply zone. I don't care if it could break out. It could break out. There might be enough unfilled orders to pause price to reverse back down. I'm not taking that trade. It is too beat up. Sentiment on the dollar is still very bearish. Yes, we're having a little bit of reversal because of more recent statements made, but I'm not in just like that. Right? I'm not just taking a trade just because that level is too beat up just from an evaluation standpoint, guys, right? What's up, Jeffrey? Like if we went and we calculated out, scored out this zone for a short, would this zone be viable, guys? Swing traded primarily, Clippy. I get it, Alfredo. For me personally, it's not a trade I'm willing to take where it is right now. I can understand why you're in it, right? You're looking at fundamentals. You're looking at the fact that we're in a supply zone. You're looking at all these things. But I'm very by the book in terms of the types of trades I take, guys. Pretty much same only. All right, I'm very structured in terms of how I take trades. It just doesn't meet our parameters, right? If I score out the zone, guys, if I score out this zone, what's trend on the weeklies? Up, down, or sideways, guys? We already did NQ. What's the trend on the weeklies here on your dollar? Up, down, or sideways? Up. This zone has been hit multiple times. So what's my purity here? Big old zero, right? Big old zero. So even with a confirmation trade, out of here, what am I looking for in terms of risk reward ratio? Like, let's say if this candle closes just like this, right? Even if I get my confirmation, this is my closest demand zone. Even if this gave me more than a 3-to-1, would I be willing to take it? No. It's starting out at a 12, guys. It's starting at a 12. Counter trend, purity's at 0. I'm out. Could it come down? Sure, it could. Doesn't mean I need to be in that trade. Yeah, I know. It's just ranging in that area, Bill. Does that make sense, everybody? You got to be selective with your trades. So, like, now could you have other reasons? Now, Green does a lot of fundamental analysis, so he might be willing to take it. I don't put as much into it as the fundamental. I mean, it's not the way professionals trade, Clippy. That's the best way I can put it. Professionals don't trade one-to-ones. So if you want to be a trader that makes consistent returns, then you should probably model yourself after the people that make consistent returns, right? That's the best way I can put it to people. If it's not what professional traders do you think there's a reason for that? There's got to be a reason for it, right? Because statistically it doesn't fare well in the long run. So what's my only actionable trade I have right now in your dollar? If it does come back down here, I could be interested in a long off of this level right here at the 109.53. But as far as the short, I'm not interested in trading where it is right now. And maybe it'll come down, maybe it won't. But I wouldn't know because I wouldn't be in the trade. Wouldn't matter to me. Cool. Everybody with me on that? Does that make sense, everybody? All right, let's keep going over here. BTC. Let's go look at Bitcoin. Let's go look at some Bitcoin. I think I have Bitcoin right here. There it is. Breaking through supply. Would we have gotten caught? Would we have gotten stopped out, guys? Phantom members? Would we have gotten stopped out on the short position? Because we were looking at this short, right? No. Why not? Because we know rules. And that is demand right there. So best case scenario, that was a 1.6 to 1 reward to risk ratio, which means we wouldn't have been in the trade, which means we wouldn't have gotten stopped out of the trade. Good thing we have those rules in place, right? That's why the rules exist, man, right? Pound dollar. Sure, we can put it on the list, brother. Rules are there to help you. Guys, like, just so you understand, scoring is not random. Scoring is based off of statistical analysis on tens of thousands of trades, if not hundreds of thousands, right? So I want you guys to understand it's like a lot of analysis that went into the scoring system. Is it a guarantee that every trade that scores high is a winner? No. Is every trade that scores low a loser? Also no. It's just skewing odds in your favor by looking for high probability trades. That's what the scoring system does, right? How about Sophia? Is that the name of the ticker, Keno? Is that the name of it, Sophia? Can you look at Palantir? Sure. We're going to learn how to look at supply and demand zones. Right here, Matthew. I'm teaching you right now, brother. So we would not have gotten stopped out, which is very fortunate for us. Now we're approaching this level. And this level is interesting right here. I have this nice impulse, balance, impulse, continuation pattern right there. Not only is that a continuation pattern, but what else do I have here, guys? That is daily, weekly, monthly correlation. Zones on top of zones on top of zones. And if there's one thing we love, it's multiple time frame correlation. So if we get up here, depending on if this forms a demand zone, right? Because this might screw us up with risk reward, depending on what happens here. This could be a potential opportunity to go short up here at the 96,137, because there's a high probability of there being unfilled orders sitting up here. Cool. Oh, this is basic stuff, Baked. Thank you, man. My entire family was against it except my father, Clippy. My father was the only person that was supportive of it when I first started learning it. Everyone else was like, oh, isn't that scary? Isn't that risky? Isn't that dangerous? That was the entire family. And I was like, I'm pretty sure Goldman Sachs hasn't just been lucky for decades, guys. Like, it's a skill, right? Either you learn the skill or you don't. But, you know, it's not like, I always find it funny when people say like, oh, isn't it, I can't say the word, you know, isn't it G, you know, and I'm like, no. Because if that was the case, then do you see a lot? Does Goldman Sachs go fly out to that desert city? You know, is that what they do? No, that's not what they do. But they sure do this, right? So, you know, if you can't understand the difference between the two, then that just means they don't understand how to trade, which is the way most people understand trading. They don't really understand what trading is, you know? So they give an equivalent that they think of what it is. I don't trade off resistance or support, man. I trade off supply and demand. Anyway, so that's what I got for you in Bitcoin. Potential short up here. We have to see how it sets up here. I would set an alert for myself like right below here, like probably at, 96 or, maybe 95.8 or so, 95.9. So as we're getting closer to make sure that this doesn't set up a demand zone there. Because if it sets up a demand, that could screw up our risk reward. Tesla. Let's go look at Tesla. I'm trying to think of a word without having it, potentially flag the word and think I'm saying something else different anyway. Somebody can type it in the chat for you, brother. G rhymes with something. Anybody can type it in for him. Yes, there you go. I thought about something like that. I'm like, I don't even want to say that, man, because then maybe it mishears me and whatever, There you go, Reach. Maybe we should just start calling them that. Hey, that's a chicken noodle soup play. That'd be funnier. That'll confuse the living daylights out of new attendees, right? I don't even know what Money Tour Concepts is offline, so I definitely don't use it. I've never heard of it, brother. Nothing has changed for me on Tesla. We are still in this horrible, stupid range between institutional buying and selling and buying and selling and buying and selling. Ugh. We need to break out of this horrible structure that we've been in for weeks now. Last trade I took on Tesla was this one back here. This was the last trade I took on Tesla. So it's been weeks since I took a trade on Tesla. Right. Now that's still the level I'm interested in, 33, 30, 53. I already know the number because I've been waiting it for several weeks now. So the same way, by the way, how long did we wait for this trade, guys? We waited for a couple weeks for it, right? Well, smart money, what they use is they use a methodology called Wyckoff. Wyckoff was the turn of the century trader, traded early 1900s. And Wyckoff's, it's not that what he did was bad. It was great in his time. It's just antiquated. So I don't like the fact that smart money took an existent methodology invented by a well-known trader and then rebranded it as if they invented it. I dislike the fact that they did that. Oh, Money Tour is like that? Oh, I gotcha. They trade off Wyckoff. I find it, scummy to try and claim ownership of something that you had nothing to do with. Why don't they give Wyckoff the credit for it? But putting that to the side, the issue with trading off of Wyckoff is it's antiquated in terms of how it works. Wyckoff would try and trade the breakout from what he called accumulation markup, distribution markdown. He basically identified cycles of banks and institutions buying and selling. So Wyckoff correctly identified that most major price action is driven by banks and institutions. And he said, okay, well, in that case, I want to identify where the banks buy, identify where the banks sell, and then buy and sell with them. Now, when Wyckoff traded in the early 1900s, the market was much slower moving than it is now, right? In those days, when you would place a trade, it would actually be written down in a ledger, and at the end of the day, they would put the transference of ownership into a big ledger, and that's how everything was marked. So this was paper, writing things down. So when he would see what he called accumulation, which was the buying up of shares at the price point, and then as soon as it started breaking out of that area, he would chase the breakout. And that worked great in the early 1900s. Brilliant, smart guy in his time. The problem is we now execute millions of transactions per second, right? High frequency trading has existed for several decades at this point. So his methodology is no longer effective in most time frames, right? The only time you will ever see Wyckoff still sometimes work is on very, very low time frames. But even then, even when it does work, it's usually more effective to take advantage of the retracement than the initial breakout, because banks understand that a lot of retail traders are breakout traders, which means they will set traps on those breakouts. And that's why you'll oftentimes see a first retest of a level. Like you see how we broke out here and then we came back in. Do you see how when we came back in, this move was bigger than the initial move? Give me a yes if you can see that visually. There was the initial breakout, came back in, hit the unfilled orders, and this move was way bigger than the initial move out, right? Because they had the unfilled sell orders here, so they trapped those breakout traders right here. They got knocked out. But now, because we cleared a path of unfilled sell orders sitting out here, the first breakout, when we come back in, we hit the huge file of unfilled buy orders, and now I have fewer sellers in my way out here. We cleared the path with that initial breakout. So now I have a clearer path for the rally. And that's why most professional traders are looking for that retracement rather than chasing the initial breakout. You can get caught in a lot of traps and stuff like that. Yeah, different level of volume. Same way we used to ride horses to get around. We don't ride horses anymore. So it's one of those things where it's like, I want to be respectful of Wyckoff because he was very smart in terms of identifying what caused price action and how to trade that effectively in his time. So it's not that his method was bad. It's that his method is no longer applicable in our current market situation. But sometimes you can still see it on very low time frames. And I mean like low time frames, like scalping trades. Cool. It's not pretty, right? It's not a zone I would have traded, but it's still valid. This supply obviously is gone. We hit it once, came back down, and now we've broken through it. So the supply is now gone. And then on this last retest, we create a little bit of zone creep right here, right? So if I mark off more recent levels, let's just mark off our more recent levels. They're your most recent demand. All of a sudden, that makes a lot more sense, right? That little wick in and then bounce back out, hit those unfilled orders. No thanks, man. I don't want to do a live together, guys. I never want to do a live together, guys. No need to ask me. I never have any interest in it. And here you have institutional selling, impulse, balance, impulse, air of institutional selling right here, driving price action down. Same thing. You impulsed out, came back in, hit the unfilled orders, and already reacted back down all the way down to demand bounce. I wouldn't have traded either of these levels, so it doesn't matter to me. This level is very, very broad, and it's been retested. So for me right now, man, I don't have a lot on this chart that interests me, right? This one impulsed out, came back in, hit it right there for the first time. So if you're going to trade that level, that was your opportunity to take that trade. Don't need it to be quite that massive, but it is what it is, right? This one right here, this was the first hit. We would never have taken that trade. This one right here, this was the first right hit right here. We would never have taken that trade. This one right here, this was the first hit into this level. We would never have taken this trade. So even though these all three worked, we wouldn't have taken either one of these three trades, right? The only one that we would have considered taking is which one? That one. That's the only one we would have considered taking. Of these last four trades, of these last four, first hit, first hit, first hit, first hit, that's the only one we would have considered taking. Does that make sense, everybody? If you're not a member, that doesn't make sense. But for those of you who are members, does that make sense? Why? This one, weak impulse, poor restorative ratio. This one, lower time frame opposition, lower time frame zones inside of higher time frame oppositional structure. Lower time frame zones inside of higher time frame oppositional structure. So neither one of these three would have worked. That one would have been the only viable one. Would that have been a good trade? Yeah, it would have been a great trade, right? If you traded that trade right from first traceman back into the level right here, entry at the bottom of the zone, right? Stop loss at the top of the zone. And you traded it right down to the most recent demand. I'm trying to get this on, Jesus. And you traded it right down to demand because that was your most recent demand right there. That was a 5-to-1. 5-to-1 swing trade. Boom, in and out. That's how you trade. See where the banks buy, see where the banks sell, wait for retracements, buy and sell with the banks. Cool, cool, cool. So of the last four setups, only one would have scored high enough for us to actually be willing to take a trade. All four worked. Isn't that funny? All four of them worked. But only one of them would have been scored high enough for us to be willing to take the trade. And this is something where you got to be careful about trading, guys, because you might start getting, you might start lulling yourself into a false level of confidence where you go like, but yeah, Black, but I mean, all four worked at the end of the day. Maybe I should just start being a little looser with the trades I take. That way I have more trades in the market, right? How many people think that? Did anybody think that when I just said this right now? We only would have taken one out of the last four, and realistically 5 right there. We only taken one out of the last 5. Did anybody think, yeah, man, but what if you just took all 5? All 5 worked. Maybe we should have just taken all 5. Anybody have that thought in their mind? Nobody? Nobody's guilty of it? You guys are liars. I know some of you thought it. Because I remember thinking it. Exactly. Only for a sec. Good. I like it. There you go. Hell yeah, right? But that's an easy way to trap yourself, right? You start looking at micro, you're like, dude, all 5 of these zones worked. First hit's beautiful. First hit, beautiful. First hit, beautiful. All 5. Screw selectivity. I'll just take every trade. And you can look at microcosms of markets and convince yourself pretty quickly that, do I really need the rules? How important are the rules really? Maybe I can just take every zone. And you can lull yourself into a false sense of confidence that way, right? But I guarantee you the other parts on this chart, where of 5 setups, only one of them worked, right? So it works both ways. So don't get caught up in little things like that. The rules are there based off of tens of thousands of trades, guys. Statistical analysis, right? Exactly baked. None of the zones I've drawn are broken right now. They've all been hit, but none of them are broken. They're all still valid. Every single one's still valid here. Cool. All right, done with Euro New Zealand. So I got nothing new for you on this, brother. No, because this is on a lower time frame, man. Lower time frames can't break higher time frame structure. I mean, unless I'm mistaken, but I'm pretty sure it's not broken on the higher time frame. Well, maybe it is. Hold on. I think this is a monthly level, if I'm not mistaken. That's a monthly level. So on the monthly, have I broken it? All I've done on the monthly is wicked through it. Wicks don't break zones. I actually started right off the bat with, I didn't use a funded account. Like I wasn't, I mean, you're saying with actual live capital, right, Christ? You're not saying like prop funded. You're just saying with money. Right off the bat, man. I was trading with live money right off the bat. I never paper traded it. Cool. All right. Euro New Zealand's done. On to MSTR. I don't put a lot of stock in paper trading, man. I don't have a lot of faith in it. Because I've seen so many people over the years who great at paper trading, and then as soon as they went live, they just blew their entire accounts. Because it's never the same trading with paper trading than it is with real money. You're also trading on delayed data, which gives you false positive. You start becoming prescient. You can see what the market's going to do before it happens because you're living 15 minutes in the past, right? And all of a sudden, you're a better trader than you would be in real life because of that. Horrible, ugly demand. Horrible, ugly supply. Let's drill down to the weeklies here on micro. Weeklies. Oof. Man, what a mess this thing is, huh? Well, it's non-directional on the weeklies. Correlating structure right here, impulse, balance, impulse. Already retested once, popped out. Now we're candle closing through it. So this could potentially break that weekly level right there. And a potential, I'm going to take this thing away because it's kind of annoying. And we're setting up a potential demand zone right here. Of course, you have this other demand that's already been hit once, twice, 3 times, 4 hits this zone. Can everyone see how some bank bought heavily here, driving price action up, leaving behind unfilled buy orders? Price came back in, hit the unfilled buy orders, popped. Came back in, hit the unfilled buy orders, popped. Came back in, hit the unfilled buy orders, popped. Came back in, hit the unfilled buy orders, popped, right? More buyers and sellers, price goes up. And now we're forming a potential new level here, but we would have to wait for this candle to close. On the supply side, we're still inside of this supply right here because this was the original supply. This was the retest with a little bit of zone creep, right? So we're still inside of that supply zone. Not a level we're willing to trade either way. It's been hit many, many times at this point, right? This was the original level. Hit once, hit twice, hit 3 times, and now we're deeply penetrating with the 4th hit. So super beat up right now. I don't think there's going to be anything here, but let's see what the dailies give us. Daily level, this one gave a little bounce once, came down to this little demand zone, hit the unfilled buy orders, and popped back up. Can everyone see that? Institutional selling, driving price action down, leaving behind unfilled orders. Price came back up, hit those unfilled orders, got pushed right back down. Where did it get pushed down to? To this little demand zone. Hit these unfilled buy orders, and more buyers and sellers push price action back up. Right, so now that zone is gone. And now we have this one where we have this impulse, balance, impulse. Hit once, bounce, twice, bounce. 3 times, still lived in it, and then finally broke. So that zone's gone as well. And now we're still inside of that weekly, right? So there you are. Although realistically, I can't delete that weekly until we're done with it. So why don't we wait till we're done with it? Actually, it doesn't really matter. Whatever. Who cares? We're still inside the high time frame structure. On the buy side, little pivot right here. It's too close to supply. Risk word sucks. Demand zone right here. Been tested twice. Sucks. Got a whole lot of nothing for you, brother. Nothing I want to trade right now. Not where we are. This is already a retest of that. I don't like any of this. No, no, no. No me gusta. No es bueno. Pound dollar. Let's go check out pound dollar, GBP USD. Yeah, I prefer that. I think that's better, Clippy. I mean, Christ, it's up to you, of course, man. I personally just traded with very small amounts of capital. So when I first started trading Forex, I would risk literally $1 to make $3. That's it. So I was still trading live because I wanted to see real live trading because those are real results, right? It's not theoretical trading. It's different to trade with real live money. I just traded with very small amounts of capital. That's weird, Matthew. If you shoot me a message afterwards, brother, just shoot me your email. I'll make sure you're registered for it. I don't know what could be happening. Let me see here. It seems to be working for me, man. I don't want. I mean, I don't. I would say type it in, but I don't want you to type your personal email to the general public. So I'll just shoot me a message. And I'll make sure you're registered, brother. Cool, cool, cool. Yeah, Stephen. If you want to take advantage of the promo, just send me a message and I'll shoot you the promo code because it's not up on the website right now. Am I a day trader? I primarily swing trade, Christ. I prefer more swing trading. If you like day trading, guys, don't forget Blue will be live tomorrow. So if you want to see Blue live, you can see him tomorrow. See, 7:45 a.m. Well, it's 8:45 a.m. Eastern, 7:45 Central because I'm in Central Time. So 8:45 a.m. Eastern. So if you want to see day trading at a professional level, he will be live on our YT as well as on our IG. He'll be live on both tomorrow morning. All right. And you can watch him there because he'll be doing it through Restream. Cool, man. I'll make sure you're set up. I mean, same situation, brother, as we sat on New Zealand dollar. I'm not willing to take it. That's demand right there. That's literally demand right there. I'm not messing with it. It's not good enough for me. It doesn't meet my parameters. If we can get all the way down here, I might be interested in a position down here at 27.64, but that's it. I'm not willing to take the short, man. It's just not worth it for me. It doesn't make sense to me, right? What am I going to wait for it to candle close? Like, imagine if I wait for it to candle close out, right? And I'm having to come all the way down here. Come on, man. There you go. To get what? Like maybe a 1-to-1? Like not even remotely worth it because I'd have to wait for it to close past this demand zone, right? I'd have to wait for a confirmation. It's just not worth it. Not enough meat on the bone for me, brother. So I understand that a lot of people are right now bearish on these dollar pairs because they're saying like, ooh, maybe with all these announcements, the dollar valorize, and maybe it will. But it's not to me just about what might or might not happen based on fundamentals. It's going to be based on structure. And for me, with that demand right there, my risk versus my reward sucks, right? It sucks right now. Now, if you just took the straight trade off the zone, off the first hit, even then, your risk reward ratio down to this demand zone was only a 1.89 to 1. You would have been out. You would have been done with the trade. You would already have closed the trade, right? You would have been in right here and out right there. But it's just not worth it. The profit's not enough for me, man. It's not worth it. Swing trading, mostly day trading. It's just it's the same concept, man. You're just doing it on higher time frames, right? Why do I prefer swing trading? Less time consuming. Day trading is more time consuming. Swing trading is less time consuming. If you are still in the learning phase of trading, I think most people fare better with swing trading than day trading if they're at the beginning. Looking for buys at the demand, to be honest. Yeah, that's what I'm saying, Craig. I'd be more interested in a long at the demand. Exactly right. No problem, Christ. Do you think you could day trade? Could day trade profitable as a swing trader? I'm positive I could, Clippy. I've done it before. I just don't particularly care for day trading. It's not that I can't do it. It's just more time consuming. I don't know what Sophia is, man. I mean, I don't see anything here that makes sense. So whatever Sophia is, brother, you'll have to tell me the ticker. Palantir. Oh, you wanted SoFi? Oh, okay. You just mistyped it. I know SoFi. That one I'm familiar with. I mean, nice clean supply zone right here. Broke past opposition, little time spent. It's a standalone daily, but it's a nice looking one at the 1354. Have to see how price retraces. As it stands right now, we're clean in terms of risk to reward, right? We have to see if price continues to retrace back up here, how it retraces. But right now, potential short up there at 1354. Nice sell-off, great strength of movement, broke past opposition, little time spent, never been touched, good in terms of purity, good in terms of range. Like, it's a pretty good looking level at the 1354. But you got to see price getting closer. So what I do in this case is I would set an alert for myself, probably around here at around 1310. So I can see how price retraced, assuming it does come up, and see if that affects my reward to risk ratio. We're live across 3 right now, G. Live on YouTube, Insta, and TikTok. All 3. I will say, I don't think TikTok's liking it. It's not really been pumping our lives as much. I mean, I want TikTok to give us permission to stream so I can share the screen, because I think it looks so much better than the camera, you know, to be able to just share the screen directly. But it is what it is. Hopefully they'll approve us for it. Right now it's just pending. They haven't told us yet. Cool. Yeah, it's just where I'd set the alert so I could evaluate it better as it's getting closer. Nobody. I just want price to be closer. I was most live during 9 to 11 p.m. for day trading. So I'm assuming you mean AM, Christ. Not PM. I mean, it depends what market you're trading and stuff like that. It's less of a concern for me from a swing trading perspective. You know, I do trade in the morning, but it's not because I need to trade in the morning. It's just because right now it fits in my lifestyle better. When I first started trading, I worked a full-time job, so I would actually trade in the evenings because that was work better for me. Lulu? Sure, we can look at Lulu, Chef. Oh, my knee. Are the gold and silver coins worth more than SPX and NQ because of profit? Seems like it. Huh? What do you mean, Mason? Oh, right on time. Look at that. My body just knows, man. Lulu. All right. Let's go. SoFi. Let's just do our analysis here. So that's what I'd say, man. I like that potential short at 1354. Got to see retracement. That's what I'd say for SoFi right now. Palantir. Let's go look at Palantir. It's right on time, man. Actually, realistically, I have an appointment today. I have to go pick up my daughter and take her to the doctor today, so I'm going to have to cut out soon anyway. All right. Supply, hit. Finally broke. So this one's gone. Is this a weekly level? I think this is a weekly level. Did we break on the weekly? Not broken yet on the weekly. We can't delete it yet. But these dailies are gone. Dailies, bye-bye. No more daily there. We have institutional buying right here. Right there. Oof. Ugly zone. No, whatever. I'm just going to include both those bases. On the supply side, nice little pivot right there. Nice little pivot on the daily here. And then you do have kind of a continuation happening right here. Can you see this impulse, balance, impulse continuation right there? I don't like the gap up from the base because, come on, because it screws up my structure. But it's there. I mean, if you can break through the supply coming up to this next supply at the 120.94, that could be a potential opportunity. That's about it. Can't take this demand inside of higher time frame oppositional structure. And either way, the risk reward sucks. Can't take that short. Risk reward sucks. That's about it. 120.94 potential short. Oh, well, the leverage is higher in futures, right? Leverage in futures is 20 to 1. And it's a faster moving market. So you got to always do risk management, brother, right? Always protect that downside in case trade moves against you. Oh, sorry, hit bounce, hit bounce, hit bounce, hit bounce, hit bounce. Jesus, that thing is beat up. That short sucks. Can't take this one. It's a retest of that. It's also ugly in terms of structure. Not a lot here for me, brother. I don't like any of these levels, man. There's nothing I like here, Shafaf. I wouldn't trade any of those levels. All right. All right, guys, that is it. I got to go because I got a meeting. I got a doctor's appointment. For those of you who want to come to the workshop tomorrow night, 7 p.m. Eastern. If you'd like to learn more about trading, come learn more about trading from people that actually trade it professionally. I'm going to be teaching it tomorrow night, so you'll be with me. You can register for free on our website, TradePhantoms.com. Just click this purple register here button. In that workshop, we will do a deeper dive on all this stuff, guys. We're going to teach you a lot more about how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with them, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly so you can reduce your risk, generate high rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. It is free. It's fun. Costs you nothing but some of your time. And if you are interested in becoming a Trade Phantoms Pro member, that will be your last chance to take advantage of the anniversary promotion, guys. So if you want us to actually teach and mentor you and trade live with you, you will have a special opportunity to enroll at a discounted rate. If you want to check out reviews, go check out reviews. We're up to 97 reviews, almost getting to 100. I was reading the math that they use here. They said it's almost impossible because we're easily within 4.9, right? But either way, they say the math they do is, I forget this, some Belarusian scale or whatever. I don't know. They throw in a bunch of fake reviews to lower your number for some reason, which is weird, right? But whatever. 4.8 is not bad, I suppose. Should be 4.9 mathematically speaking, but that's okay. But if you like reviews, you can check it out. All right. And that is it for now, guys. Thank you. I got to ask, I've never had an aged ribeye. Like dry aged? Are you saying dry aged, Mason? Because you definitely had aged ribeyes. Pretty much any ribeye you buy in a supermarket will be a wet aged ribeye. Some people like it, some people don't. It's a little funkier, man. Dry aged is gonna be a little funkier. I personally prefer like a Wagyu than I do a dry aged. But that's just me, you know. So like when I went to that place the other day, I got the Wagyu, but I didn't get a dry aged. I just got the regular Wagyu because I like that flavor for more. Sometimes I've had some great dry aged steaks, and I've also had some dried steaks where the funkiness bothered me. So it just depends on kind of your flavor profile. So it depends on the place. Thank you, guys. Appreciate it. Oh, you can still get a ribeye. You know, just get a prime ribeye or something like that if you want a good quality steak. Awesome, guys. Thank everyone. All right. Have a wonderful rest of your day, everybody. That is it for today. This is Mr. Black signing off. Take care, everybody.